not get too comfortable because the next set of sessions is definitely high stakes, high energy, and absolutely unmissable, or something you want to make sure you remain engaged in. So we're driving straight into the topic that keeps fintech leaders on their toes. And we've heard it being mentioned in a couple of the conversations that we've had today. It's the big C, cybersecurity. So we all know that with cyber criminals evolving faster than ever, it's no longer about if an attack will happen, but when, and more importantly, how prepared you are to fight back. Leading this crucial conversation, we've got Roy Alves, Sales Director for Africa at J2 Software, who will unpack how AI is revolutionizing threat detection and mitigation, why mobile security in fintech is non-negotiable, the art of building bulletproof incident response plans, and he's going to share a little bit of that with us today. You ready for us? Awesome. You can come through. Round of applause for Roy.
Thank you, Chipper. Good afternoon, everyone. I have got about 21 or 22 slides. It's not a death by PowerPoint. I'm going to try and make this interactive, and I'm trying to make it more real world. I am going to talk about cybersecurity. You will see in the heading there is becoming more cyber resilient. We don't have time to cover off all the intricacies of cyber, but I'm going to hone in on two elements which I think are probably the most important. If someone said to me, I've only got 10 Rand to spend to secure my environment, I'd probably say to them, take 9 Rand and just address these two things. And those two things are email. We're going to talk about phishing. Phishing is still right up there. It's 90-something% of all these attacks are down to a malicious email they got through. And the second thing I'm going to talk about is the human element, the person sitting behind the keyboard. There's some food for thought in that element as well. All right, so let's kick off. We can take some questions at the end, but if there's someone that sees something and wants to raise their hand, let's try and make it interactive. All right. So I'm going to share, what I'm going to do is these first two slides are just going to kind of set the scene of what it looks like. And here's a nice way of looking at cyber. Data breaches are viewed an even greater risk than climate change, inflation, and financial crisis. We are seeing globally businesses closing down, finished, out. Companies that have been around for millennia closing down due to a ransomware attack or a loss of data. All right. If you can't produce an invoice, you can't produce a statement or a delivery note, you cannot function as a business today. No longer do we have these big cabinets with file cabinets with physical paper. It's all sitting in a digitized kind of vault. All right. So let that sink in. The second thing I want to mention, I hope you can see this at the back. This is a report on email security that's done every year. The results are generally out in Q1. So the next 2024 results should be out in the next few weeks. But it's a bleak picture. What we're seeing is the number of incidents and the amount of money being generated from cyber is on a trajectory. It's getting bigger and bigger and bigger. Every year we're seeing more and more of these incidents. And the second thing that what I want to talk about today is the sophistication. It's no longer, a guy sitting in a basement, with a hoodie on that we all kind of visualize these hackers. These are sophisticated syndicates doing the work. And interesting enough, if you look on the right-hand side, I was actually chatting to Matt about this at lunch, look where South Africa ranks, and this is where hackers are sitting, where the attacks are taking place. Interesting enough, South Africa is actually ranked number 14th in the world. I think Nigeria is there at number 5, and it's the usual suspects that we see. But a lot of the crimes that we've been investigating in South Africa on cyber are crimes from within the country. All right, so that's a point to go away with. The second thing I wanted to share on this side is if you took cyber as a GDP of a country, it's probably number 3 in the world, after the US and China. That's how big this business is. So it's very sophisticated and syndicated work. Okay? If you look at this top statement, I think this is also alarming, is criminals are exploiting AI, and look at that number, 1,265% increase. So, we call these AI tools friend or foe. It really is. There's a very dark side to some of these tools. And we're going to talk about that a bit. Okay. As I said, the two topics I want to cover is email, and we're going to look at the human risk element. So, why do attackers use email? And here's some interesting stats as well. There's 1/3 of a trillion emails that get sent every day. 1/3, 347 billion emails. And if you actually break that down, half of that is spam. So call that 180 or 190 billion emails are sent every day as spam. But the concerning piece is the 3.4 billion emails that are sent as phishing or malicious mails every day. And to my point earlier, these numbers are going up. Okay, they're not going down. And we're seeing this at scale. There's a lot of tools available in the dark web now that will weaponize these threat actors to do it at a scale and actually do what we call social engineering on those mails. So the old ones we used to receive, remember? You got this email that said, click on this link, you've got an opportunity to win a cruise or a Mauritius holiday. It's no longer that. It's very, very targeted mails. Okay. And then on the bottom right-hand corner, if you can see that, I thought that is also interesting. 62% of that 1/3 of a trillion emails are read on a mobile device. Okay. And that's food for thought there. Because the reality is most companies are very secure in the actual device that the users are using. But the mobile phone is your personal phone. And more than half the mails that we're receiving are actually read on your mobile phone. And think about it. The first thing we all do in the morning, and my wife always moans at me, we roll out of bed and we read our emails. It's generally sometimes the first thing we all do. It's a habit, all right? And in those mails could be a weaponized mail. Okay. I just want to add as well, there's more emails on the planet than there are people. Let that sink in a bit. The majority of people have more than one email address. So that's also interesting. And the world has moved to cloud platforms. And the two cloud platforms are, as we know it, Microsoft 365, and the second one being G Suite, or the Google Workspace. Those are the two main players on the planet. I think Microsoft talk around 400 or 500 million users on there. Something crazy. So traditionally, they've been doing it in I call this the 3 buckets of a malicious mail. The first one is an attachment. So what they do is they embed a bit of malware or some malicious code inside a document, a PDF or Word document. And what we're starting to see is that they will maybe call the user and say, hey, I'm phoning you from Standard Bank, or I'm phoning you from First National Bank. We've got a new loyalty program. We've got a new X, Y, and Z. It's a kind of, you suspecting that it's going to be a good email. You open that document, and boom, there's a bit of lateral movement on some malicious code. Malicious attachments is number one. The second one is impersonation. And this is a massive problem, particularly in South Africa. The person you think you're speaking to is actually not the person at all. And I'm going to talk a little bit around DMARC and DKIM and SPF. I won't go too technical, but I'm going to circle back to the impersonation. And the third one is everyone's familiar with these malicious URLs. And we're seeing lots of those at the moment. Okay? Typically, you would receive something like this. Hi, this is IT. Please go, it's conditional password, whatever the procedure is. Please go in and change your password. Make sure you've got MFA enabled. We see a lot of these. And actually what you do is typically you'll go look at the URL field and it'll say login.office.com. And what the guys are doing is they're changing some of those characters around. They're using maybe an Arabic keyboard or a Turkish keyboard, that the O looks like an O. And we were just chatting about it earlier because I've got my glasses here. But don't click on links that take you to a site to do a login like this. Be very, very, very careful. The second thing that's happening, so I'm going to go to this slide, is once they get in, they go and they create these weird and wonderful rules. Common problem in South Africa. Because these rules will go and kind of forward all correspondence and it'll look for words like finance, statement, invoice, banking details, anything pertaining to monetizing that form of communication. You change the password, you enable MFA, but that little rule is sitting in the inbox that no one knows about. That's essentially exfiltrating all your mail, that someone else is reading it. We see lots of these problems in South Africa. And the user says, but I've changed my password, and I've got a new MFA and I've implemented this and that. Have you gone to look to see if there's any rules hidden inside your 365 profile? No, they haven't. Okay. Common problem in South Africa. And I wanted to go back to the slide quickly. Remember this. If someone has, and I'm assuming many of you are on 365, but you've got to think of it like this, because we're doing it in Joburg, and maybe as an analogy, if you think about it as a bunch of keys, and those keys are your garage doors, your alarm, your gate, your front door, your back door, that's the treasure trove to your personal belongings. You really have to think about it like that. Because 365 credentials give everything. They provide information on all your documents, your calendar entries, your emails, everything that pertains to you digitally is sitting inside that tenant. So if someone has those credentials, they have access to everything. Think about it as those physical keys is kind of the point. I wanted to touch on DMARC. Is anyone familiar here with DMARC? Does anyone know what it is? I'm just feeling out this audience. Okay, let me tell you what it is, and I won't go too technical. In 2011 or 2012, the majority of the big tech companies got together and they said the world has got a problem with the transmission of mail. And really it is very easy to impersonate a domain. And I can actually, if we had more time, I can show you how easy it is. I've got an example website that allows you to do this. So they came up with something called the DMARC standard. And what that essentially means is the sending server that's sending the recipient mail is essentially encrypting, and there's more or less a handshake, a digital handshake to say that I'm receiving you, you're an authorized sender, I see your certificate, and I know that you're the original allowed sender, and I'm going to deliver it to the end user. The problem is, in South Africa, and I'm going to choose my words carefully here, the corporates, the banks, maybe some of the big insurance companies have implemented DMARC. The majority of customers haven't. And I said this earlier, this technology was invented in 2010, ratified in 2011, and a standard was drawn up in 2012. So we're looking at a technology that's 13, 14 years old that the majority of companies haven't implemented. Why is this important? It's important because the hackers can very quickly look at your MX records, your mail exchange records, and they can determine whether you've got DMARC implemented or not. Okay. It actually takes 10 seconds to do if you're manually doing it. If you're doing it with some sort of AI regenerative type tool, you could do it at scale, and you could do thousands of them within milliseconds. And essentially, you can pop out a report that says all of these companies don't have DMARC. It's become such a problem that Yahoo, Google, even the personal email boxes you have today have started enforcing these policies. But the reality is, on 365 and on Google Workspace, the majority of credible companies actually haven't implemented it. So this is maybe something just to take away and go and have a look. Go to use MX Toolbox, or there's lots of tools to go look at your DKIM records. But I would highly recommend it. There are sites available. I've just done a screen grab of one. You're welcome to try it. EMKEI. My eyes aren't great. CZ, I think. It's Czechoslovakian. There we go. I can go and write from an email address and essentially send kind of a weaponized mail. They even give you the ability, if you want to go and do it as kind of rich text and sort of go do a scrape of someone's signature and all the details around them, and you can go and send an email. And there's lots of these websites around. Hence the point I made earlier. There's a lot of impersonation happening in South Africa. I always say to companies, if you want a good rule of thumb, is if you receive an email where it's a changing of banking details, we're all familiar with these, or something that just doesn't sound right, pick up the phone. You know, some of us are old school. Pick up the phone and phone them. I've just received this email, is this correct? Rather do that. If you get a phone call from them, don't accept it. No worries, I'll phone you back. Okay? Because we are starting to see that now, particularly when there's high-value transactions. Okay, now, I want to talk about phishing 2.0. And I think this is where the problem comes, is that all the traditional methods that we've been using, and I'm going to talk a little around this as well, are falling short. So the mail filtering, the way we've been dealing with mail historically, is not good enough. The mails don't have a bad attachment. They're coming from It's looking like correct senders. So the mail servers are even looking correct. And equally important, there's no phishing links in there. But they're writing very sophisticated text. And that text is off what the AI engines are providing them. So they're learning your digital profile. Matt and I were chatting about this at lunch. They'll actually go and investigate a particular person, or at scale, a whole company. And they'll create a weaponized mail based on the intelligence gathering that they got on that particular person. So for instance, sorry Matt, I'm picking on you there for a second. But imagine Pat's a big mountain biker, and he's done Sani to Sea, and he's done the Cape Epic, and all of those bunch of things, and he's done some extreme sports. I don't know, Matt. Could be wrong here. And I go and create a mail, and I say, I'm from Cycle Labs. We've got a new promo, or a new this, or a new that. How much more powerful is that mail knowing that he's a cyclist rather than they didn't? Okay. And that's the point there, is that a lot of the stuff that we're seeing is very personalized. It's very targeted mails. It's not the old way of doing things. And the way this is working, and the way that it works is like this. It starts learning the correspondence that we have. So for instance, if I've been talking to one of my colleagues, and there's a good example of it, and I use the words, hey Roger, how are you? Haven't spoken this week, etc., etc. It starts learning, the systems start learning that correspondence, that terminology and the content, the font, everything around. We call it social graphing. But then suddenly there's an email to Roger that says, Dear Roger. Well, that's not right. And the problem is Roger is, many instances, probably not going to pick it up. But these intelligent, what we call business email compromise engines will pick it up. So there's a good example. Another good example is the words urgent, needs to happen now. We can't wait until in month end. So it's got these, what we call natural language processing engines built in. So it starts learning that sense of urgency. People don't really speak like that. Maybe if you're in finance, it might be a specific thing. But generally speaking, that doesn't sound right. So it starts looking at all those analogies. And the last one there is what we call dynamic banners. And I wanted to bring this up as well. This is also interesting, because the mail's not malicious. Call it suspicious, maybe is the word to use. And I'm accessing it on my mobile phone. And like me, I've got to use glasses. So it's quite difficult to read and very difficult to go and look at those URLs and that. But what it starts doing is putting up these colored banners in specific colors. So the higher the severity, the redder it's going to be. And in those colors, it's going to give you specific information about that mail. And it's difficult to read it from up here, but essentially it's saying, hey, Matt, you've received this email, but so did 50 of your colleagues. Or hey, Matt, you've received this email, but understand that domain or that email address was registered last week. How's that possible? Or, hey, Matt, you've received this email, but the email address has special characters. Who has an email with special characters? It might be legit, but it's giving you a warning. And the beauty with this is it's doing it on your mobile phone, all right, or on a tablet or a PC. But it's just orientating you a little bit to say, hey, you've received this email, but dig a little bit deeper into it. Okay. There's a lot of analogies behind it. There's lots of others, but I kind of want to give you a bit of a feel for that as well. So the mail's legit is what I'm saying. The second thing that hackers are doing is they're doing something called mail tracking. Mail tracking is essentially, it's reconnaissance. It's learning about the browser that you're using, your geolocation information, OS. It's giving them very rich data on you, on the recipient of a mail. It's actually interrogating a lot of the mail server information. A lot of that metadata actually exists. And based on that reconnaissance, it's then able to build kind of a weaponized piece of information. So these type of dynamic banners are actually reading for those market trackers as well. Okay. The last thing it does, sorry, and I'm not a sales guy for this, by the way, but I just want to orientate you as well. Imagine for a second, you're sending a very sensitive document, and I'm sending it to maybe the exco or the board or to our management team. But accidentally, what happens is I include someone that shouldn't be on that mail. You know how Outlook sometimes does it? It kind of auto-fills for you. So I want to send it to Jared, but pulls Jared, who's an external person, not Jared from our office. I hit send, the mail goes. It inspects the mail, looks at the content, and this is very important from a compliance perspective as well. It's looking at the content, it's looking at the domains on the to part, and it sends me a note back saying, hey, Roy, is this really the recipient you're trying to send this document to? So think about that a little bit. It's also protecting kind of a fail-safe on your data, okay? I want to talk about human risk as well. I think this is good for time here, but let's get through this as well. And this is super important because I think it's the next frontier for cybersecurity businesses. You know, we've invested so much money in all the technology, in the whole stack all the way up, but we've left out the human to a certain extent. And here's a nice way of looking at it. Hackers don't attack networks. They don't attack endpoints. Hackers log in the very credentials that a user gave them. And what does that mean? That means that you could have you could spend your entire IT budget putting the most incredible security controls in your business. But you've got a user that clicks on a link and goes and shares his credentials. Okay, so think a little bit about that. And we're going to talk a little bit about this now. So the way we've always done it is we push training down, and we've tried to do it in an engaging way that people enjoy it and they get value from it. And you can categorize it, use real people, make it short. We've done amazing things training our staff and just raising their security awareness. We're able to gauge it. We can see where you're tracking. You can see what their module completion is, what their score rate is. It compares you to industry standards. But there's one problem here, is that it's always been a spray and pray. In other words, I've got 200 people working for my business. I'm going to push down training to 200 of them. The science says this: only 8% of your staff are the ones that are going to commit the fraud. Or maybe not in a malicious way, but accidentally. All right? So the concept of spraying to all doesn't really work. It does if you're doing nothing, but what you want to think about is, how do I go interrogate the users that have got bad behavior? And that's where the elegance lies. So our work has changed. The way we collaborate and the data that we use has changed. You know, if you think about the consumption in WhatsApp, for instance, how many of us use it every single day? Most of us have actually got the desktop version of it. And we are collaborating and talking on lots of these different channels. So we're talking about email, we're talking about the retention of sensitive information. But what about the guy that's sending something out on WhatsApp? This is happening all the time. So really what you want to do is you want to go and start, and I've got a slide that I want to get to, but you really want to go and start analyzing that user's IT posture. In other words, if someone gets to work in the morning and the first thing they do is go look for a job, the next thing they do is they work in a Word document editing their CV. And the third thing they do is they start posting it on some social media platforms. Well, I want to know about it, because no training to that user is going to protect my data. I want to be notified immediately that this particular person is a potential flight risk. All right, so there's the analogy. Let's start looking at what people's IT posture looks like and baselining the training based on that. So if they're on a job site and they're looking for a job, maybe get a little Teams nudge or a Slack nudge, or maybe even a WhatsApp nudge and say, hey, dude, that's not okay. Rather do that after hours. That changes behavior. All right. So that's that last frontier that we're talking about. If you look at the other stack, the network, endpoint, identity, data, application, I was going to get a slide that shows you all the security vendors, cybersecurity vendors, and you can't even imagine. There's thousands of these guys that are really addressing this piece. And I've just put some of the industry experts in that field. But on the human side, there's a handful of them. And in my view, I think that's where we're missing the boat. It's that problem that sits behind the keyboard. You really want to address that. If your users are stealing data or they're doing stupid things, you want to address that very quickly, because that is a massive security breach. Okay. And this is the point I wanted to get to. So start looking at, I've got API inputs and endpoint detection and response, but start getting a kind of a data lake of feeds that we can start using and then implement some actions around that. To my point earlier about sending them a nudge or giving them a little bit of maybe a written warning, or maybe throwing some more training at them. Hey guy, you've now clicked on 3 links in the last 14 days. Maybe you need to watch some more videos. And that there lies where the beauty is that elegance in addressing those specific users or the weakest point is really going to move the needle for you. Okay. So there's a massive drive in the cybersecurity space now to move the training to what we call a human risk platform. And I think if you look, there's probably 4 or 5 vendors that are doing this well, but really think about that. But if you're not doing any training, start with the training would be a suggestion. Once you've moved from training, then start thinking about looking at that IT posture. All right. That's me. Thank you very much. Is there any questions? Go ahead.
I wanted to understand, how do we protect our clients from desktop pirates? Because that's something that's really taking a big toll of specifically corporate clients.
That's an amazing question, because the reality is this: you are as weak as your supply chain. So you can implement all the security controls, and if someone in your supply chain has got a security vulnerability, it essentially means that you have a vulnerability. There are some tools available that actually look at your supply chain, and there's some very, very sophisticated stuff that actually goes out on the dark web, and you can actually say, these are the companies I deal with. It goes and grabs their domains, and it goes and looks on the dark web, and it does what we call credential harvesting on the dark web. Surface that information, and then in your supply chain, you can go back to that company and say, hey, in order for us to do business, we're actually picking up a whole bunch of issues with your business. That's one way of doing it. The second thing is, I'd encourage you to get companies to do what we call security vulnerabilities assessments. So what does that mean? If you're familiar with the word, I'm just checking my time here. If you're familiar with, familiar with the word pen testing. Pen testing is essentially the guys are trying to get through the front door, right? In our view, it's a very old school way of doing it. They're all going to get in. Think about it like that. But once they're in the building, you want to limit those attack pathways. You want to limit their movements. So I'd encourage you to think about those strategic partners that you're dealing with, or in your business community, to furnish some of the reports that they've done, or risk assessments that kind of put them in best standing would be my suggestion. Okay. Good. Good. Thank you. Good.
Give me 1 minute before I direct us the wrong way. Yeah, I think I'm good. I'm good. Lerato, I wanted to double check before I... Invite Lerato to come and take us on for the next session. I see you're ready, and I'm going to allow you to come through and introduce yourself and tell us what you do, and share with us the lovely insights that you have. Thank you so much.
Can you hear me? Now you can hear me. Okay, cool. Afternoon, everyone. I have the unfortunate task of speaking to you during the graveyard shift.
Not really.
And I made a horrible discovery straight after lunch that they did not serve coffee. So I'm going to be sensitive to that fact. So I'm Lerato Lamola. I'm a partner at Weber Wenzel. I'm a lawyer for a living, but specifically I'm a financial regulatory lawyer focusing on consumer-facing financial regulation, which includes fintech. And what I'm going to talk to you about today, thankfully, a lot of the earlier speakers have done the legwork. So I'm going to jump to the heart of my presentation and skip through a lot of the introduction, because I feel like the other speakers have set the scene quite well. So what I actually want to speak to you guys about today is fintech licensing passports. A lot of what I do is advise fintechs and traditional financial institutions, and it's a range of things. It could be introducing new products, licensing, engaging with the regulator. And I have the privilege of advising fintechs that have a global reach as well as a regional reach. And one of the main questions that I often get from them is, well, why do I have to do this? Because we have operations in Kenya and we don't need to do this. Or we're doing this in Ghana. Why can't we just copy paste and apply it here in South Africa? Now with all of these discussions, in 2022, one of the themes that has come out is this concept of fintech licensing passports. And it is the concept where you would have a single licensing regime. And it is a single license issued by a member regulator, which would allow a fintech to operate in multiple jurisdictions for whatever product they have been licensed for. And the idea is that the African Continental Free Trade Area agreement should be the driving force of this, right? Now, those of you who aren't familiar with various international agreements, AFTA, and I know I'm not pronouncing the acronym properly, but forgive me. The whole idea is that as Africa, we should remove the barriers to trade, and we should create economic regions on the continent where we can freely engage with each other economically, right? And fintech is seen as one of the drivers which can make this possible. So obviously having that mandate, AFTA, would be the appropriate vehicle to introduce fintech licensing passports. In December last year, Ghana and Rwanda announced that they are going to launch the first fintech licensing passport regime. And it's actually going to be launched next week at another fintech conference. However, it is not going live. And now let's interrogate why is it not going live yet, right? So maybe just before I get into why it's not going to go live, maybe just to make some observations from my side. So as a regulatory lawyer, I must be honest, the term fintech is actually a misnomer for me. Because as a financial regulatory lawyer, when a fintech comes to me and says, oh, I want to introduce this product, there is no such thing as a fintech license, right? You come to me, you're either in the Banks Act, the Credit Act, Financial Service Provider Act, or you want a payments license. So when we talk about fintech licensing passports, I think the first thing we need to appreciate is that there will need to be categories. It's not going to be like a one-size-fits-all. Secondly, within fintech itself, there are so many product offerings, right? There's remittances, there's mobile money, there's digital assets, then there's the infrastructure behind fintech, which now we talk about blockchain, we talk about payment systems. So there are various topics within this umbrella of fintech that we still need to interrogate domestically before we can even start having the regional discussions that will need to happen. But that being said, Ghana and Rwanda are giving us our first test case. And our first test case sits in the area of payments. Now, what Rwanda and Ghana and some other countries, which I'll discuss now, they are members of what we call the Pan-African Payment and Settlement System, PAPS. So this is a market infrastructure for payments. So when we talk about payment systems, or rather, let me say, when we talk about the national payment system, the national payment system is the infrastructure, the rules, the procedures that support our payments, right? And payments is understood to be a significantly important element of our financial sector. And I think all of us can appreciate that. If you could not make a payment and all payments were stopped and we had a downtime in our payment system, that would have serious repercussions for the economy. So looking at PAPS, so PAPS is intended to be a cross-border payments market infrastructure. It will allow instant, real-time payments between countries.
Do you have power?
And
I'm coupling you with my 2% battery.
There's just some feedback. And PAPS supports three core processes when we talk about payments.
Type C.
It facilitates instant payments. It will require pre-funding of participants who want to take part in this payment system. And it also allows for net settlement, and I'll explain what that is just now. So PAPS currently has 15 central banks that are members of PAPS. So PAPS was started in 2022, so we're in year 3 now. Unfortunately, South Africa, our central bank is not a member of PAPS. That being said, if we look at the 15 members, now when we look at SADC, Zambia, Zimbabwe, and Malawi are all members. And the reason why that is relevant for South Africa is if you look at the banks that are part of PAPS, so we have 15 central banks, and then we have about 50 commercial banks that are part of this PAPS system. And if you look at the commercial banks that are part of this system, it's banks like ABSA, FNB, Stanbic, which is obviously the Africa arm of Standard Bank, as well as Access Bank. So in my mind, if I'm looking in my regulatory crystal ball, where you have South African-based banks and their regional banks are already part of the system, a natural evolution is that South Africa would likely be able to jump on and become a member of PAPS at some point, because the infrastructure and all of the little bits that needed to be figured out should have already been figured out. That being said, again, like I said, payments is the test case, right? Turning specifically to South Africa now. So South Africa is in the process of modernizing its payment system. And one of the things about this fintech licensing passport regime, particularly in the space of payments, is there will need to be a modernization of most of the African payment systems across the continent. Because when we talk about payments, just like with any fintech, we are talking about things like interoperability. So the ability for us to speak to each other regardless of what system we are using. The other thing that we'll need to take into consideration is, so innovation is borderless, but regulation is not. And there are certain principles that our regulation is based on that we need to figure out cross-jurisdictionally how we overcome those things. And my favorite example is, particularly in the realm of payments, and now we're talking about cross-border payments, is exchange control. South Africa is one of the few African countries that have exchange control regulations. We are a continent of 54 countries, and the last time I counted, there are only about 11 countries that have exchange control regulations on the continent. So when you want to introduce a regional licensing regime, we need to be speaking to the same principles, and specifically now with cross-border payments, you can't have a situation where one country wants to implement exchange control regulations, and then you have another country that it's not even in their legislation. And the idea is that we're having instant payments that are happening between these two entities. You know, those are some of the things that we need to figure out. So, what does this mean for you in the room? You have to be a part of the conversation. And what does that mean? So with any new piece of regulation that comes out, there's a public comment period, but also the sandboxes themselves are also, I guess, public consultation 2.0 from a technology point of view. Every engagement with the regulators needs to be taken as an opportunity to feed into this process. Like I said, South Africa right now is not a member of PAPS. And if, on the one hand, National Treasury has said that it is modernizing the payment system, if I was a fintech, my immediate question would be, thanks for all the modernization, when are we joining PAPS? Right? Yes, there are domestic things that, that we need to sort out, but the next immediate question should be to them, have you thought about PAPS? Where are you on the journey? Have you started the conversations? How's it going? Because if we don't start having the conversations with them, we're going to get left behind. So then the question is, well, what should you be talking about when you actually get in front of them? So I think the gentleman in the front here asked a question when it was the regulatory sandbox panel, and you asked the question about education, and when somebody joins the sandbox, what level of education is actually happening? Are the regulators actually taking it on board? My counter to that is, we as an industry, or let me say you, because I have the privilege of just being a service provider, so I'm going to remove myself from the we. You have a responsibility to actually understand what are the policy considerations that are motivating regulators when they draft legislation. Now, if I focus on the payments business case, or rather the payments test case, which we're in now in PAPS, all central banks are members to several different international standards. South Africa, like I'm saying, has said it wants to modernize its payment system. The first thing National Treasury is going to do is it's going to go back to its international commitments and look at what are the principles that it should be thinking about when it implements whatever regulatory changes it wants to implement. I apologize in advance for the next slides. I know it's after lunch. I'm sorry, but bear with me. So the first set of principles that I just want to cover quickly is, so there are World Bank General Principles for International Remittance Services. And these are the principles that SARB, as well as all other central banks all over the place, are looking at when we talk about remittance services. That's our cross-border payments. And just going down the list, these principles make sense, right? The first one, there should be transparency and consumer protection focused. The payment system infrastructure should increase the efficiency of payments. So let's get the economy moving. The legal and regulatory environment for payment services should be clear. There should be clarity as to what's going on. The market structure, so the payment system itself should encourage competition within the market, and governance and risk management, as several of our speakers have spoken about earlier. And interestingly, in this particular document, it actually it has a section where it talks about remittance service providers, i.e. fintechs, and the relationship that they should have with public authorities. And effectively, it's saying that the role of fintechs is that they should participate actively in the payment system. And then the role of our public authorities is that they should evaluate what action needs to be taken, i.e. what aspects actually need to be regulated, and ensure that these principles are implemented when they actually introduce the regulation. But another set of principles, and I promise this is the last set, are the core principles for systemically important payment systems. So, as I said, payment systems in our financial sector are considered systemically important. This infrastructure cannot fail. And you'll find that when it comes to payments, the regulation, the closer you are to the payment system, the more stringent your regulation becomes. Now, I say this because one of the main comments that has come out of South Africa updating its payment system is that fintechs want to have direct access to the payment system, non-bank entities. Currently, how it works is only banks are allowed direct access to the payment system. And one of the things that because now clients will be like, what do you think? And I think it's great that we have more activity. However, I think one thing that fintechs need to appreciate, and this is the one part that I'm going to get technical on, and I apologize, I know it's 3 o'clock, no coffee, but I do want to just explain this. So there are two concepts in payments which are critical that make payments work. It's the concept of settlement and it's the concept of netting. Now, I'm not going to assume that everybody in this room knows what I'm talking about, so I'm going to explain the concepts as easiest as I can. To the bankers in the room, excuse me, I am simplifying this to the core. So settlement is the idea where if this gentleman in the front was a retailer or a shop, I walk into his shop and I want to buy something, right? I take out my card or my phone or my app, however I want to pay, and he has whatever device to receive my payment. I'm with Bank A, he's with Bank X, right? In that moment when I tap my card, in the background, messages are being sent. And the first message that is sent is from my bank to his bank to say there is money in my account, process the payment. Now, let's say this transaction happened at like 10 a.m., right? In that moment, no money is actually exchanged between the banks. At whatever time is set for settlement, at the end of the day, Bank X will say, hey, Bank A, where's my money? And at that point, there is actual physical cash settled. So that's concept of settlement, high level. We can debate banking law later to my bankers in the room. Then netting. Now, netting is the concept where, okay, same example, Bank A, Bank X, transactions are happening the whole day, and thousands, right? Thousands of transactions are happening. At the end of the day, we get to a point where we realize, okay, for this particular day, Bank A owes Bank X 100, Bank X owes Bank A 150, right? And it could be any, and I'm just using simple math now. The process of netting is where we say, well, I owe you 100, you owe me 150, let's balance out the 100, so you only actually settle 50. You actually only give me 50. And that's the concept of netting and settlement at a very high level. Those two concepts are the life and death of any payment system. And it is critical that our payment systems have the ability to do that. And for my fintechs who want direct access to the payment system, the concepts of netting and settlement bring in prudential considerations now, right? So up to now, payment service providers are only really regulated around conduct. But the moment you want direct access to the payment system, you need to be willing to put your money where your mouth is, i.e., that's where we talk about pre-funded accounts. So you need to have enough money that when we do the netting and the settlement and all of that, there is money to do that process. And maybe one fact that I just left out is with our central banks, so all central banks own the national payment systems of their countries. All major banks, so let's just focus on South Africa. All of the big banks, actually all of the banks, have accounts with the SARB. And those accounts are pre-funded so that when netting and settlement happens, the SARB sorts out any deficits, right? And then the SARB will come back to whichever bank didn't have enough in its account to be like, hey, you haven't pre-funded enough, we paid this, can you pay us more or whatever. So as a fintech, if you are saying you want direct access to the payment system, you need to be willing to put the financial capital forward to be able to engage in netting and settlement and the like. And it's just something that, I hear a lot of fintech saying, oh, why do I have to partner with a bank? Why can't I just go direct? And cool, you can do it, but you really just need to make sure that you have your finances in order. Yeah, I'm not going to go through the other core principles because I think I've made my point. I think that's me. I don't think I have time for questions. No, I don't. So that's me in a nutshell. Thank you, everyone.
I couldn't disturb that description of netting and settlement and the side lecture you decided to give the fintechs. There. Thank you so much, Lerato, for that. We really do appreciate it, and it was insightful, as simple as it was. Now, let's talk about something that can make or break a fintech business. So we're moving it along, and that's customer service. So in a world where digital is king, a great service is the crown jewel, they say. Today's customers expect seamless, personalized, instant service, anything less, and they are on to the next option. And I'm sure all of us understand the cost of customer acquisition, retention, lifecycle management. We all have these programs in place. From AI-driven chatbots to the power of human connection, this session will explore how fintechs can redefine customer experience and build loyalty in a fast-paced, mobile-first world. And who better to lead this conversation than Tsidiso Kuzwayo, also known as Teddy. He is the head of service operations at Old Mutual Bank. It says OM Bank, so I'm assuming it's Old Mutual Bank here, and it's not another bank. Let's give Teddy a warm welcome. It's Old Mutual, right? It's not. What is it?
Can you guys hear me? It's the third time we're trying to launch a bank. So when we went to the regulator, they said, you cannot be Old Mutual Bank again. But hopefully it will be successful this time because our colleagues are at the regulator as we speak. Hopefully we have met all the Section 17 conditions, which is really the last step before we're allowed to open for business. But action attraction. Okay, welcome. Sounds like you've already done my speech, actually. That welcome was so amazing. I may as well just take questions and answers now, right? So, as a disclaimer, and I hate to disappoint you, but I do not have 22 slides, and I do not have written principles. I only have myself, images, and 1 or 2 videos. So you're going to have to pay attention to the sound of my own voice. And I hope that's okay with you.
Thank you for calling. Your call is important to us. I'm afraid we are currently experiencing very high call volumes, so there may be a delay. Have you tried our website? It's the quickest way to get help. Just go to our website. We haven't been able to answer your call. We're doing literally everything we can to get to you. Call volumes are unusually high and have been for several years now. Unusually. In the meantime, how about checking out our website? Or stay on hold and we'll be with you as soon as humanly possible.
Okay. So by show of hands, how many of us have had this experience? How many of us have had this experience today? Me. And a couple of you guys as well in the room. And really, it speaks to the importance of customer service today, in that the way in which customers expect us to service them is on demand. And if you go back to the history of customer service, so if you look at trade as a concept, it started around 150,000 years ago. And back then, that's when we started interacting as human beings, where you had merchants that would then trade with other merchants, but they'd also go and sell their goods and services to other human beings. And over the years, and by the way, back then they used to travel very long distances. And over the years, and I'm talking about through the Middle Ages, ancient history, Greece, Roman history, as well as Egyptian history, what tended to happen was we started industrializing, and there was concentration of people, which developed into villages and cities. And when those kind of developments happened, we started forming marketplaces. And these marketplaces were physical interactions of merchants as well as human beings that were servicing each other. And what really happened in terms of the evolvement of customer service is the picture that you see behind me is actually a lady that was working in a switchboard. And the switchboard was launched in 1897, around about the first industrial revolution. But just before that, one of the most important phone calls that changed the course of history was made by none other than Alexander Graham Bell. And what did Alexander Graham Bell do? Inventor of the telephone, right? 1876. When he invented the telephone, he tested the telephone. And when testing the telephone, the very first conversation he had was with his account executive or his executive assistant. And the words that he uttered is words that changed the course of history forever. And he said, Mr. Watson, the EA's name was Thomas Watson, Mr. Watson, come here, I want to see you. And that sentence changed the course of history because it defined the way in which we engage with each other through that technology, which was groundbreaking back then. And so 1897, there was the invention of the switchboard that you see behind me, and the concept of call centers was really popularized around the 1960s, when the very first idea of IVRs, the IVRs that you saw the gentleman take on that call earlier, the IVRs that really channeled any telephone conversations that would come from a customer into a call center, and a call center being a concentration of people sitting in the same place that are taking telephone calls or servicing customers. And in today's age, it's changed entirely. So the picture you see behind me is no longer a concept. After COVID 2020, a lot of us banks were very excited to introduce the concept of virtual call centers. And in fact, it's still a concept today that we are excited about, but that concept is gone. Because all that virtual call centers are is call centers having agents that are taking telephone calls at home, right? As opposed to in the middle of Randburg or the middle of town where all your call centers are, right? Cheap rent and cheap labor. But the idea and the concept of a call center that exists or will exist that has absolutely no human beings is no longer a concept, but a reality. And I think it's really about time that we self-reflect on exactly how we can make that possible. So just think about it for a second. A call center that hires AI agents. Not a single human being, but in essence, a programming language that does the entire fulfillment, whether it's a sales process or a service process, end to end. As an example, Uber. How many of us use Uber? 10 years ago when it launched, it was the most frustrating thing, and I'm now referring to the self-service component of Uber, which did not have a number. Because every time you're frustrated with your driver not coming or the driver coming late or canceling, the first thing you do as a frustrated customer is you want to call the call center, but you cannot. And they've intentionally designed their business model that you have to force yourself to actually use the app. And we can even bring this closer to home. Takealot. Anyone know the Takealot call center number? Because I don't. but they've designed their business model and their business in a way that is driving customer engagement, saving a tremendous amount of money, but also making it easier for customers to service themselves. So essentially, you're helping customers help themselves. And that's really the world in which we are moving to, is we are helping customers help themselves. And the idea of automated customer service, which is completely humanless, if I could call it that, is with Uber Eats. I don't know if anyone has ever ordered Uber Eats, and when the parcel arrives or your food arrives, you get a call. But the call is not from a human agent. It's from an AI agent, because they will tell you that your order has arrived, correct? And that's really the idea and the direction that we're going to. The challenge I have personally, and I'm sure a lot of you guys can relate, is when are we going to get a South African voice? Because the way in which I'm so frustrated, I am going to send a note to Elon Musk and President Donald Trump to write an executive order to say we need to have South Africans, not in Texas, but South Africans in our IVR actually answering telephone calls, correct? Because the reality is that the way in which we are relating with service bots or AI agents or whatever you want to call them, they have to be conversational. And that really brings me on to the next idea of what we call conversational AI. But before getting to that, this concept of omnichannel, I'm sure all of us have come across it. And all of us have played around with it in some shape or form. It really controls the boardroom. We talk about omnichannel strategy, but it never really works. Do you know why? Because we're trying to be everything to everyone. And taking a step back, what does omnichannel actually mean? So the word omni is a Latin term that stands for all. And omnichannel was popularized in the 1990s when there were really three channels that were brought together to service a customer. The one was catalogs. Catalogs came out of the US in the early 1900s, where product information was put in catalogs and distributed to customers for them to consume and be incentivized to buy product. The other channel was online. And who remembers AOL? You're giving away your age, but it's okay, because I don't remember, but you remember. Online was a channel that was also made popular in the early 90s. And then, of course, we had brick and mortar. Brick and mortar, there's a lot of shops that really concentrated themselves around bricks, not bricks the idea, but bricks, brick and mortar. And in the Fintech world, or even any world really, there are any form of shops, bank branches or retail shops or FMCGs, Pick and Pay, ShopRite, which really concentrate themselves around creating a platform, and if you want to really call it modern marketplaces, for customers to engage with suppliers. And so this concept of omnichannel was made popular in the early 90s. Now, before we go further into complicating things with conversational AI, there's certain principles, okay, I learned the word principles, but I'm not going to write them down, right? But there's certain principles that we need to keep in mind, and we really need to enforce in applying these principles, and we need to be deliberate around them. Because the first thing is you cannot be everything to everyone, meaning you need to be very specific around choosing your channel. The second thing is before you even choose your channel, have an idea of the business architecture that has to go behind it in order for you to be able to support and service your customers end to end. Because in essence, when it starts coming to conversational AI, you need to be able to make sure that the technology that you choose is able to give you the right data points in order for you to give your customers the consistent experience that you want them to give. So in essence, what could typically happen is you could want to sign up to a bank using an app, but there'll be a drop-off because of whatever reason, so you've run out of airtime, but there has to be continuity perhaps in one of the other channels. And so your choice, number one, of business architecture, your choice of technology, your business requirements, because quite often it's actually less about technology, but more your business analysis. I see you nodding your head. That is the pitfall of failing in a digital or an AI transformation. And so those are the principles that we really need to take into control and we take into consideration. And really, 3 key outcomes that we get out of omnichannel and omnichannel AI, the application of AI agents that actually take data points that in essence incorporate the consistency of the experience across your various omnichannel channels, is personalization, because you're looking at the integration of you as a customer and the company, the fintech, actually does service you as an individual. Data integration, which is the consistency of all those various touch points, and efficiency goes without saying. And the other thing with omnichannel, before I move on to concluding, is you need to be present where your customers are. And where are your customers? Where's my phone? Here. This is where your customers are, correct? And we need to also be clear on who your competitors are. So if you're a payments company, you need to shift your paradigm in terms of who you're actually competing with. Because it's very easy for you to say you compete with another payments company. And that's all good and well. But your customers spend almost 10 to 11 hours, if you go to your screen time on your iPhone, on their phones. And what is the top 5 apps? I can guarantee you that your bank app is further down the line. You have Teams, you have YouTube, you have Outlook, and you may have 1 or 2 others. WhatsApp definitely being one of them. X, because you want to keep up to date with what's happening with executive orders. But those are really your top 5 apps. And you need to be present where your customers are. So really think about those applications and the applications where you spend most of your screen time as your competitors, because you compete against time, and not time bank, but time as in the concept. And really, ultimately, as I close, I believe in this model called the service model blueprint. And in essence, it's working myself out of a job. And just to run you through this framework, it comes down to how do you service your customers to the best of your ability? How do you learn from those insights? And how do you effect change to go back to your engineers, if you're building a platform, to actually improve the platform that you're servicing, or the product or service that you're servicing your customers? And the serve, learn, change at the moment is quite human-led, because you'll have a call center, and then you'll have a data team, and then you have engineers. But very soon, you actually don't need a human being, because you can program these, because you've got the concept and the framework, you can program these to be done by an AI agent. There's no need for a human being. You can service end-to-end. You can learn by using Amazon Connect Lens or any form of insights capability to actually do the analytics, and then you can effect change. In essence, bringing all the change down to your engineers. And really the last thing that I want to mention is around artisans. And this is quite an interesting advert, because it talks about artisans as a profession that's actually going to go out of business, but it's the complete opposite, because cloud computing and AI, it requires artisans, right? Servers need to be built. So there's actually a shortage of artisans. This company just had to make a joke about you don't need artisans, and there's call center activities and people that are going to lose their job, etc., etc. And then where to from here, as I close, is the reality is, even though the use cases around AI, where there's lots of automation that you can apply, the reality for us in the room, as fintechs, as bankers, is we operate in a very regulated environment. And our fellow speakers that spoke just before me, a lot of pressure speaking after them, very smart people, the regulator, cybersecurity, But the reality is that we have to closely collaborate within the guardrails of where we operate, because we need to treat customers fairly. We need to ensure that if there's phase applicable, we take that into account. And even things like complaints. Complaints, there's a policy, there's compliance, there's reportable complaints that we have to report to the regulator. And in doing so, I still believe that our human intuition is still superior than any AI model that we take into account. And so where to from here is deeply apply your mindset into how we can disrupt customer service, but also take into account the human element, that you will always need humans in order to support your customers. Thank you.
Excellent. Thank you very much for that. Don't forget your phone. That is literally your life in your hand. We're going to move on to the next panel, and it's interesting. You spoke a lot about how customer service is being done, and yes, human intuition will always be superior. But there's also a hot topic that goes around in terms of talent. Talent not just for big organizations, but fintech talent. And as all these technologies evolve and advance, we need talent in AI, in blockchain, in data science. And the next panel is going to give us a rundown or discuss what the future workforce is going to look like. The panel is going to be moderated by Sherwin David, Head of Talent at Alexander Forbes. Yes, I'm going to need 4 seats. And then we've got Didi, who is the Group Account Executive at LifeCheck. I'm checking that they're mic'd up. Are you ready? Okay, cool. And then I've got Tato, who is the Head of User Experience at RMB. And then we've got Sean, who is the BU Head Human Capital at FNB South Africa. Are you all ready and mic'd up? I see you there. Where are your fellow panelists? You don't know. Me and you are going to do this thing together. All right, I think they're coming through. I think they're coming through. We don't need to do it. I don't need to do it, at least. All right, awesome. Thank you so much.
Everyone mic'd up?
Yep.
Yes, thank
Good
you.
to go. Can you all hear us?
Can you hear me?
Brilliant. A very good afternoon, everyone, and an absolute warm welcome. I know it's after lunch, and we got the slot after lunch, but we're hoping that this human capital conversation will certainly steer us in the right direction. Well done to all the previous speakers. I can safely say that if Teddy's going to start a campaign for a voice for the contact center recorded option, I'm going to vote for Teddy. So Teddy, you have a great voice, brilliant energy. So I think if you are the recording on these pre-recorded contact center spaces, we're certainly voting for you. So a round of applause to Teddy. And best wishes to the OM Bank, and I hope you launch well. And we wish you tremendous success. Ladies and gentlemen, it gives me distinct honor this afternoon to share this panel and to moderate this panel on an incredibly important subject matter within the tech space, which is our talent enablement. But more importantly, what we would like to address as an outcome of today's discussion is some of the gaps that we're currently experiencing in the tech space and how we, as professionals and leaders in the talent space, can effectively address this to ensure that we can support talent and build talent, but more importantly, grow our own talent. I'm a firm believer in growing our own timber here in Africa. Africa's rich with resources, Africa's rich with possibility, Africa's rich with talent, and I think it's about time that we start building, developing, and growing our own talent. So it's such a joy for me to introduce the panel this afternoon. I'm going to say Didinkler, but she prefers Didi. So it's my joy to introduce Didi. Didi is the account executive at LifeCheck.
And Didi, do you want to say hello to everyone this afternoon?
Hello, everyone. It's really a pleasure to be here. Thank you for having me.
Fantastic. Welcome, Didi. Tato, it's such a joy to meet you. Tato is the Head of User Experience at Rand Merchant Bank. Tato, your opening thoughts?
Hi, everyone. Very different panel to be on, but looking forward to it.
Fantastic. And Shanae is joining us from FNB this afternoon. Shanae, FNB doing some amazing work in the tech space. Your opening thoughts for us this afternoon?
We are all the time, most innovative bank and all of that, but very, very passionate about the topics that we're talking about today.
Okay, brilliant. So my panel and I are hoping to address some of the questions that were posed previously by some of our attendees, but more importantly, for us to be able to end the session with some feedback, with some thoughts, with some thinking around some talent challenges. So we're going to kick off with our first question that we have, which is talking about bridging the skills gap in the talent space. And my opening question is as follows. What are some of the pressing skills gaps in the South African fintech workforce? And how can we address these through upskilling and reskilling programs? Didi, I'm going to give this one to you.
Yeah, sure. So I think we need to look at what we're trying to solve with the skills. So when you're building a product, I believe there's probably 4 main stakeholders when building a product. It's the product manager, it's the product designer, the engineer, and if you have a big enough team, you can add the product marketer. So the skills that I think would add value to a fintech is skills that would feed into those positions. So you need people who can build products, the engineers, so understand how to write code and all of that. Marketing, how do you do discovery work? Mm-hmm. How do you get out there and engage with clients and get insights? Yeah. Things like that. Product management, how do you end up putting what the insights together and what the engineer would be doing to produce a product? Yeah. And then the design is what the client would end up using, so UX design. So I think those are some of the key skills that you need, and then you kind of branch out from there.
Fantastic. Now, Didi, there were some brilliant life lessons for me as a human capital professional for the last 20 years. And I think historically, I'm in no way a tech-enabled person, but I think we all like to evolve and grow. It's evolve or die, right? But I think one of the life lessons, I think, in my career was I would come up with these brilliant ideas and mind map it and brain map it, etc., and then hand that over to the tech guys to build and to develop. And I think what that was doing was building a us and them sort of approach. Whereas I think one of the lessons was get your tech team involved from your design stage so they can become enablers towards some of our human capital processes. And I think that's where we need to grow, and I think that's a place that we all need to evolve in as corporate South Africa. Get tech involved as soon as possible. Taso, I know that you are super excited on some of our questions here today when we spoke previously. I want to talk to you very quickly about some key skill sets for fintech. Right? And in your opinion, what are some of the key skill sets required for fintech professionals to truly succeed in industry? And how can we ensure that our workforce is equipped with these skill sets, which are ever evolving and ever growing?
Yeah, so I think we're in a stage in our lives where we've obviously seen that AI is taken over. Most of today has been around AI, new technology coming in. And from my perspective, I think we should not necessarily focus on the core skill of, for example, development, but I think we should start looking at how do we creatively enable the AI to do what we need to do. So AI is really good at, taking a process and ensuring that it's seamless, that it's fast, and that you don't need someone there from 8 to 5. It can work 24 hours. But how can we enable that process to be efficient for our users? So I think creative thinking. I'd also think about empathizing, defining the problems that we have, ideating, coming up with the right solutions for the right problems, rather than focusing on building the tech itself. And like you just said now, often tech is separate from design or from business. Ideally, we want the tech team to be a part of that solution that we built from the beginning, which for me is tie them into that metric or into the vision that you're starting off with, not just here's a problem, here's what I need you to build.
Okay. Natasha, I'm getting the sense that you're talking efficiency, you're talking streamlining processes, you're talking marrying the tech with the process and the process design from the start. And I'm really loving that. What I want to talk about is I recently did a little bit of research in preparation for today, and we were talking about the world of work and what does 2030 look like in the workplace. And we were talking about job titles and profiles that are currently being built or developed or maybe already in motion in some organizations. But for the year 2030, we're hearing things like AI ethicist, which is a key role that will be needed in corporate work. We're using words like AI enablers, and we're talking about the governance and the processes and policies around these elements. Your thoughts on that?
Yeah, I think as I said, we're in a place where the current role that I probably have will not be or would not be existing by the time 2030 comes, or at least very minimal parts of it will. I think it will evolve from, actually doing design work or coming up with strategy to becoming something that is really tied to how do we ensure that we streamlined in terms of creatively coming up with solutions. So not necessarily being entrenched in the operations, but strategic conversations, strategic decision-making, and so forth. I think when it comes to AI, as mentioned earlier as well, we're in a position where it's not so much we need to focus on the people that are building the LLMs. So who are those people that are really defining what are these things that we need to build and stuff like that. So AI, I'm not surprised if we'll have an AI designer within the next couple of weeks or years. And that's just the trajectory that we're going in.
Okay, great. So if I'm looking for a job in the future and if I have AI ethicist on my profile or my CV, I think I'm going to be much more employable. Right. We're going to park that one with you for now, Tato. Shanae, I'm going to come to you very quickly. Our existing workforce, right? And tell us what FNB is doing from an upskilling and a reskilling perspective in order to maintain talent, in order to also attract new talent, but more importantly, to put us on the cutting edge of constant evolution, change, development, and growth in order to retain some of our tech talent.
So I think just by testament of today, right, the topic of AI, whether it's generative or agentic, is around every single boardroom. But I think what we've come to realize is that you're not going to be able to realize any of those strategies that you've come up with in the absence of your people. And so you have to take people on the journey with you, and different people that are at different levels in the organization, different people that are in different functions, that are either implementing AI kind of initiatives or on the receiving end of them, also need to be all at the same level of literacy, if I can put it that way. So I think a strong focus on ensuring that the foundation of AI literacy, data and analytics literacy, machine learning literacy are topical and they are kept ongoing in an organization.
Brilliant. Thank you, Shanae. Didi, I want to come back to this concept of tech accelerators, right? And when we refer to that, what we're talking about is we're talking tech accelerators and incubators. How do these sort of programs support talent development, talent attraction, and talent growth within an organization?
Yeah, I think they play a big role, especially in the early stages of a tech company, a fintech company. There's a lot of support that you get from these incubators and accelerator programs. You get opportunities to collaborate with other entrepreneurs, CEOs, and so forth. There's also opportunity for you to attend certain platforms at a reduced rate. So you're actually saving in terms of the money that you would spend. So you can focus on building what it is that you're building, and you've got the support that you don't need to incorporate in your business at an early stage. So that support is great. Some of these accelerator programs are collaborating with corporate South Africa. And so there you get exposed to serious mentorship.
Of course. And
you get exposed to people who, so from a governance point of view, when you're starting your business, you can get some guidance in terms of that, you know. Within the corporates, there might be individuals that are looking to get into the tech space. So maybe you work for a bank, maybe an FNB, and you're thinking, I really want to explore and go into a small tech startup. the incubators can introduce such talent to these fintechs. So it's really a platform for collaboration, networking, meeting new individuals, getting perspective as well.
Of course. And then for organizations that do not have these incubators in place, what do you think are the three main pillars that they need to build on to introduce these incubators or tech accelerator programs into their current human capital or their learning operations?
So I think you're talking now a big corporate that doesn't have an accelerator. Yeah. Really, then I think the main thing is, what is the vision for the business in 2025? And you spoke about 2030. That's not too far off.
Absolutely.
Where are we going with this? Your legacy systems, is this something that you really want to reinvent the wheel? Or are you looking to collaborate? And the best way to collaborate is to kind of partner with the fintechs that are coming up. So I think one pillar would be collaboration. The other part is if you've got your executive team and nobody's thinking in a fintech way or in a tech way, you might lose sight, you might lose perspective. So I think broadening the horizon is another pillar that you can lean on. So within your team, try bring in a tech startup CEO or like someone that is working within that space to kind of give you that perspective and show you, are you on the right track? Do you have some blind spots? And can we support you in that, in what you're trying to do?
That tech startup mentality is what I absolutely love. The innovation, the hunger, the creativity, the sort of thinking outside the box, the passion. And I think we can truly use that to build these accelerator programs. Shane, I want to come to you very quickly, and let's talk about talent attraction, in the tech space. And, I think being in talent myself, we also understand, and some of my colleagues in the room as well, who are incredibly enabled around the talent attraction space. We're seeing at times that there is a bit of difficulty in attracting tech talent. It could be legacy systems, it could be programs, it could be remuneration, it could be our benefit offering. In your opinion, what are some of these challenges and your thoughts in terms of how we can mitigate these to ensure we're attracting a high caliber of talent?
I think it's actually all of those. I see them on the daily in the role that I play. I think for me, the most beneficial approach when it comes to attraction is really transparency. This is what it is that you're signing up for, and this is where you get to play. These are the things that you get to do, and this is how we will enable you to reach what it is that you want. I think from a human capital perspective, we often shy away from saying that an employment relationship is a mutually beneficial one, and I think we need to be a lot more deliberate about that. And what that means is you are here to earn a salary and to add value, and you've got a skill that we want to mine. So how do we set this environment up in such a way that it feeds both of those needs? My challenges are slightly more different. It's less about the attraction and more about the retention, because you build and you invest and you grow your own timber. All of that talent planning needs to be living processes that you implement, right, with actual outcomes. And so you get people to a point where they become very attractive to this market, and then you have to work very hard on your retention strategies.
Agreed. And I think one of the very dirty words that we use, and forgive me for calling it a dirty word, especially in the attraction space with regards to tech talent, is this concept of market-related salaries. There isn't such a thing as market-related salaries. And I think, it's purposeful work. It's about impactful work. And our tech talent who's enabled, who's future fit in their thinking, want to work with organizations that, number one, have social responsibility. Number two, organizations that have deep impact. And I think we also people want to work with brands that have meaningful impact. And they want to know, how does the tech that they provide or that they develop or they help us grow and develop have meaningful impact both on our clients as well as the industry at large. We're coming to an end of this conversation, which I'm thoroughly enjoying, and I feel like a talk show host at this moment, right? But I mean, at this point, I want to pose a question very quickly to Tata. And Tata, I want to ask the question about how do we future-proof the fintech workforce? Shane talked about retention and about ensuring that we have retention processes and principles in place to make sure that our skilled talent, we are able to retain them. But how do we future-proof tech talent within organizations, and your thoughts on that?
Yeah. So I think from my perspective, things have changed dramatically from at least when my parents used to work, where, it's almost like the organization was doing them a favor by giving them a job. And we've now shifted to a focus on quality of life at work. And often what I tend to look for in an individual when we're hiring for talent is not so much your skills, but more your character. I can teach you the skill, I can't teach you character. And we want to build a good culture in the business where we, enable people to thrive. I often say that our CEO tends to say R&B is a people business enabled by technology. So I'm not hiring you based on technology per se, but it's because of your skills as a person. And it starts with the individual. So I think we need to, or a part of what we do needs to start looking away from the requirements of, yes, do they have a master's degree? Do they have this? Do they have that? Because AI will take that away from us. We give them one piece of paper and they can probably do it 10 times faster, or if not 100. So it should be rather focused on the actual character of a person and how they can actually develop that going forward. And so if we look at Gen Z, as we call it, they're also looking for quality of life. It's not so much, I want to be in the office 8 to 5 anymore, which is what COVID did to us, right? So we're now just, as long as I can make sure that I meet what has been asked of me and I meet it to the right standard, I should be delivering on what I've been asked to do. And it should be easy for me to fetch my son from school or watch a soccer game, whilst I'm able to perhaps attend a meeting or deliver on onboarding, whatever it is. So I think we need to be really adaptive as an organization. But from a personal perspective, I think we need to be ready for change. That's the only thing that's constant. And I look forward to just what comes up next, because it just means there's an opportunity for us to be much better than where we are right now.
Agreed. It's also a valid point, and I think productivity ratios, especially with the working from home or the flexible working concept, is that productivity ratios we found has increased dramatically. Because number one, 8 hours a day with a bum on a seat is not purposeful, is not impactful work. Yes, some jobs certainly require that, okay? But in terms of true strategic, impactful and purposeful work, a bum on a seat for 8 hours a day, of which 6 hours we're watching YouTube videos, is not impactful work. And when we looked at productivity ratios, we found that an employee is much more engaged, right? To start earlier, to finish later, because in between I can watch my kids swim, in between I can take my kids to karate, in between I can do the quick school run, and I understand that my organization cares enough to be able to do that, and because they care enough to do that, or to allow that, I feel a lot more engaged and able to deliver a lot more. It's a valid point, thank you so much for that. How is tech, and I'm going to pose this to all three of my panel members, how is tech truly enabled, and I would like all of us to answer this very quickly, how has tech truly enabled the candidate experience through talent attraction and talent retention in your organizations very quickly? Or if not, can it? And what impact is it having? Shanae, we'll kick off with you.
I think it has impacted it to some degree. I think the challenge that we have is around how it is that we integrate it in such a way that you don't lose that human experience and that feeling special through that headhunting experience or that onboarding experience. I think it takes away the miles of millimeter of depth, if I can put it that way, in work, and the people get to focus on the actual people experience.
Brilliant. Tato?
I think there's great room for improvement. There are many strides that are being made. I don't think we're there yet. I think we often focus on digitization rather than transformation. And what I mean by that is we often take a process and we just make it digital. So put it on a computer. Let's interview you on Teams rather than truly transforming the experience. And I guess maybe because my industry is a bit peculiar, I found that it's really troubling when you go to an interview and you're asked questions in a particular way, knowing that it actually doesn't add value to the interview itself, but you're forced to do so. So I think there's huge strides for improvement. One would be in how we collect data, for example, and doing it in the right way at the right time.
Fantastic. Didi?
So I think tech is exciting. It's made the journey of finding talent easier and nourishing that talent as well. So an example is you don't really need a CV. LinkedIn can really be your CV. The employer can really look at Didi's journey. What does she do? What articles is she writing? What is she into? So that's already a transformation that's happening. And when you go and have your coffee chat or your interview, what does collaboration look like? So if you don't need the bum on the seat, are you able to communicate via Slack? Are you able to use Google to, Google Docs for us to comment and just get things done? So tech has made the engagement in the workspace more exciting, more efficient, more practical as well. You can solve a lot of problems faster, So I think if you want to be in an environment that is ever-changing, don't be focused on titles, don't be focused on I'm this because tomorrow it can change. It's more really what are you up to, what are you getting out there, what's your output, what are you trying to accomplish? That's the focus, and just have that spirit of learning all the time.
I love that, the spirit of learning. Africa is rich with talent, Africa is rich with tech talent, and Africa is certainly the place that we want to play in to be able to attract and retain tech talent within the technology space. Ladies and gentlemen, it's my distinct privilege again to thank my panel for an engaging conversation this afternoon in addressing the talent gaps within the tech space here in Africa, and we hope that we have provided some insights, some knowledge, and some expertise in terms of bridging those gaps. Please give my panel a wonderful round of applause. Thank you again. Thank you. You're wonderful. Thank you.
Thanks, Joanne.
Thank you so much.
Thank you so much.
Sharing your insights with us. Please don't forget to come to my right and get your goodies. And before we go to the next slot, we've got an announcement that we want to make.
Ladies and gentlemen, good afternoon. This is a short announcement. I'm sorry to disrupt the conference. So it's a pleasure to be here. And at BII Global, we just don't do organized industry events, but we also deliver world-class corporate training programs designed to equip professionals with skills they need to stay ahead in the rapidly evolving business landscape. So with a deep understanding of global markets and industry best practices, our training programs are tailored to empower organizations, enhance leadership capabilities, and drive business excellence. Whether it's finance, fintech, leadership, or strategy, we bring together top-tier experts and cutting-edge insights to create transformative learning experiences. At BII Global, we believe that knowledge is the key to progress, and we are committed to helping businesses and professionals unlock their full potential. Let's build a great future, and by saying this, let's have a look at a short video. Thank you.
Thank you.
In today's fast-changing world, knowledge isn't just power, it's survival. The best leaders never stop learning. The most successful teams never stop growing. BII Global presents world-class corporate trainings, led by certified, renowned trainers with globally recognized credentials. The question is, are you prepared for the future? The right training doesn't just build skills, it builds industry leaders. From From finance to technology, leadership to strategy, BII Global delivers cutting-edge training designed to elevate your team. Train with the best, get certified, lead with confidence. The future of leadership starts here. BII Global, where learning creates leaders.
Excellent. Thank you so much for sharing that insight with us, Ray. You are extremely kind. He says he's disturbing the program, but it's his program. So he has every right to disturb the program. But thank you so much for being kind to us. Now, that time of the day has come. One of the most anticipated moments of this particular conference is the fireside chat. And this is not just a fireside chat. This is a rare opportunity that all of us in this room have to hear firsthand from a visionary who has redefined banking and financial inclusion across multiple continents. To run this particular session is Lerato Lamola, who was here before, partner at Weber Wenzel, and she's going to sit down with Dr. Chart van der Walt, who's the co-founder and director of a Time Group. When Chart came in, I was touched because he came in with his daughter. I hope she's here as well to see her daddy speak. Is she there? Is she at the back? Oh, there she is. Yeah. He came with his daughter to this session as well. So, hi, daughter. We don't know your name. Hello. From breaking new ground in digital banking to embracing AI-driven customer experience, this session is packed with insights on what it truly takes to build a bank that serves millions. Chart, please don't hold anything back. We want to know it all, like from day zero right up to now. And all the stuff that's being said in the media, is it true? What can we expect? I have my own questions. Lerato, I'm like just adding them so that I make sure you don't miss any of the questions. But thank you so much. Over to the both of you.
Thank you so much.
Hello? Okay, you can hear me.
Okay, we are on.
You're
I can
on.
hear myself.
Yes, thank you, everyone. So I must be honest, I was also very excited for this session. And full disclaimer, I do sometimes do work for Time Bank, so there may be some personal tidbits that could come in. But Chart, I think, as we said, we really just want this to be a conversation, a storytelling, maybe just to start off with some facts, because we really want the conversation to be about day one to now. So starting from today, going back, as of 13 February, Time operates on the model of no branches, no branded ATMs, so a true fintech. So Chart, maybe starting right back at the beginning, you and your co-founder, Kunyonka, had an idea, and in 2011, you
from day one was to build a multi-country digital bank for emerging markets that can give people much broader access to financial services. That was the stated vision that when Kun and I shook hands on the 29th of April 2011, literally 6 months before we actually started with the project. We said that was the stated goal. I think it's important to go back a bit because I want to do something a bit different from what you will normally hear in these types of forums, and that is give you a bit of insight in the thinking, in the mindset. One of the previous speakers said the mentality of this venture. And it's all about partnerships and trust. And the first partnership is a very important partnership, and that was the partnership of founders.
So Koen and I, for example, met each other. You said from day one. Let me go back to day zero. Met each other as student leaders. He was at Koffsies, I was at Stellenbosch, SRC presidents. And we met each other and we just had incredible chemistry of trust between friends. And throughout the years in the 90s, we kept close contact. We were best mates at each other's weddings. When I started building my previous business, which was an AI software platform, in 2000, Koen was one of my friends and family investors into that venture. For example, at that stage, he was the managing partner at Edward Nathan, and he became very interested through Gibbs in the concept of capital formation. What is the difference between the haves and the have-nots? It's got to do with this mystery of missing information. So the venture we started in 2011, 2012 was actually a second attempt. So while I was busy building the AI software platform business with previous partners, Koen actually started to do this within Standard Bank. It was called community banking or inclusive banking. It was incredibly difficult, and there are certain reasons why it's so difficult to do it within a big bank. And that is the founder's mindset, that is just so difficult to be there. You know, in a big bank, many times visionaries are seen as a bit destructive, or a distraction, not destructive, a distraction. You must keep them there because you've got a big ship to run. So when I sold with my partners my previous business we sold it to General Electric in 2011, literally 3 weeks after that, Koen and I got together. Yeah, it was Central Hotel in Melrose Arch, and we shook hands and we said, right, let's do this together. And it took him a few months to get out of Standard Bank. So I wanted to spend a bit of time around partnerships and trust, the next phase. So we were then challenged by the notion of how do you start this thing? You can do it the garage way, like Steve Jobs and Steve Wozniak, or you can what we called, you can go start big and hopefully end bigger. So we went into a partnership with Deloitte to develop it for two reasons. The one was that we wanted access to good skill, banking skill, regulatory and technologically wise. The second thing is we wanted access to a good brand, because one of the foundations and the principles of design was that you always start with distribution strategy first. You know, I'm talking about over and above the consumer offering. What is your distribution strategy? And we literally start working on distribution strategy first. 4 months later, we started to put together the technology team to start to build this. And that's very important. You know. So towards the end of the second half of 2012, by the way, just take one step back. The first thing that we did with Deloitte, we sold the project to MTN to build them a bank, not just a money transfer solution, a bank. And they bought into it. That gave us the capital to start to put the team together. During the first 9 months that we were actually running within Deloitte, it was important 9 months. We established a few cultural parameters, I think, that were incredibly important. From the start, we said, we're going to do this through partnerships because we want to go big. We've since then always believed in you can go bigger through sharing. We are a very open organization. There's nothing to hide. There's no secrets. Because if you've got the distribution right and you've got you can get into the heart of the consumer. If you service them well, you can actually win in the market. We also believe that if we partner, then we will create new markets. In other words, there's nothing like a zero-sum game in this. It's good that there are other players with us in all our markets from a digital banking perspective and fintech perspective, because in so doing, you create a much bigger market. It's a different notion than incumbents normally trying to fight for the last customer all at once. Okay, so a few design parameters was important, which is also how we established culture that brought the right team for us, which is important. We said that we are going to focus on distribution. I already mentioned that. We're going to make sure that we have a single view of the customer, single view for the customer from day one, that we've got a data strategy that is absolutely world-class, so that we can solve this mystery of missing information, and so that we can create alternative, for example, credit models and service models for our customers in a sparse data environment. It's interesting, in South Africa, we've got quite a sophisticated and mature credit industry. In the markets where we currently are operating in Southeast Asia, for example, the Philippines, Vietnam, and also now Indonesia. We just 2 weeks ago launched our first product into Indonesia. There you've got much less data to work from. There's no credit bureaus, for example. So you have to find other ways to do credit scorecard building and so on. And you can only do that through partnerships. Yeah. Right, so the other thing that we said from the start, we have to bring down the cost to serve with an order of magnitude of a Capitec. Okay, specifically stated that way. And we are currently able in South Africa to get an SRD grant holder, 350 Rand a month, onto our platform, and there's a payback of around about 12 months on that customer, as long as government pays, by the way. That's a different story, or SASSA. So the model has proven itself from a cost-to-serve perspective. The design parameters to get there were, like as I said, it's about culture.
Yeah.
But we said no paper, never will we have paper, never will we have middle offices with credit committees, other than building digitized models to, in a straight-through processing way, actually provide people with our offerings. Never will we have people working for us on our payroll that will deal with our cash, but we'll have the most ubiquitous cash distribution system or cash in and out system in the country. And then we had to solve for the huge digital divide in emerging markets, and that's why we designed the kiosk. It's a proprietary tool for us. It took us many years to actually get to the level where we are currently, and actually are replacing the fleet in South Africa in this year, hopefully. That is a first version. And what the kiosk basically did for us was it became an assisted self-help channel, and it gave us the ability to issue personalized debit cards for people who can open accounts within 5 minutes. So those things were all were the building blocks of actually getting to this point. Low cost to serve. And in this whole process, you know, our retail partners have played a tremendous role. First of all, it was MTN. Then it was Pick n Pay in South Africa and TFG in South Africa. And we partnered in the Philippines with the Gokongwe family. You know, they gave us a one-stop shop with multiple branded outlets and FMCG chains and so on and so forth. And the same model we're actually taking forward into Indonesia and the likes.
Guys, you'll notice that I'm letting Jad do all the talking. And because this is really our chance to just feed off of the knowledge. But maybe just picking up on that point of partnerships, how do you choose the right partners? What are the indicators of this will be a good partner? And let's say you choose a partner, the relationship is going. What are the red flags when you're like, actually, I don't think this partnership needs to go any further?
Sure, that's absolutely key. First of all, you have to be a good partner. And so the first one is you have to default to a position of trust, not distrust. And it's very difficult to create partnerships with, for example, retailers. It's because they are cutthroat businesses and hard business people that will go for every dime. Okay? The second point, and that's in other words, trust. The second one is you must make sure that there's a very, very firm overlap between your core business and their core business.
Okay.
And I can't overstate that. It can never be an experiment on the side. Then it will remain an experiment who's got limited chance for survival. The third one is the notion that you have to understand the commercial long-term gain, the economic gain for the partner. So what we always do with our partnerships, we literally model out the partnership's economic benefits. We have our own strategy team modeling that out so that we understand and that we make sure that there is actually proper long-term benefit for them so it remains core over the long term. So what I always say is leave money on the table. Leave money on the table. It's important. And then the fourth point, perhaps on this specific topic, which is just as important, I think, is if you enter into partnerships and it's your core business that gets enabled through it, take full accountability for the success of that partnership, even though you don't have full control over the partnership.
Talk to me about culture.
This is a topic, Lerato, that I'm very passionate about. Okay. Because I really think that is the difference between high growth businesses and, let's call it, businesses that are just adding 10% or 5% or 12% per annum. And I'm going to make a statement that might be contentious in here, but I actually believe that there are very, very few companies globally that can be high growth, high impact businesses, high growth businesses that are not founder led. It is because this almost obsession to do something that is game changing, an obsession to be successful, in many instances, an obsession to survive. That mindset, the obsession to be lean and hopefully later resourceful, really resourceful. Okay. So a culture of leadership where it's inspired by vision, must not only in their ability, but in their intent, is incredible. It's people who won't just go in and say, I've got 5 years or 10 years in my contract, and then the next guy will take over at the contract. People who live a life that want to give birth to something, to a baby that will grow big and will become independent from them. So there's something about that, and that's what I call the equity of trust. You know, I always say a test for me about culture in a business, in a high-grow business, is where the power comes from. Where your power comes from. Let's say you're a founder or an executive. Does your power come from the board that has given you a mandate? Or does it come from your peers or the people that are actually working for you? Now that is sustainable power. If the power comes from the bottom and around you. Okay, so, and I think these things are actually very important principles in my book. I've seen it, I can tell you many stories. I've been exposed to some companies also who bought us, who I sold my previous businesses to, and so on, where you could see that this is a very transactional environment.
On that point of high growth businesses, so Time is a South African brand that you have now taken global.
Yes.
Talk to me about that decision, the decision to go global and how you chose where to go.
Okay, so going back to what I said, you know, the first statement was we're going to go multi-country, digital bank for emerging markets. I'm not going to claim credit neither will Koen or anyone in our team for the decision to go to Southeast Asia, which is a fantastic decision, because it gives us access to 600 to 700 million population, people within 4 countries. Okay. Now, what happened there is more destiny than design. It was more by destiny than design. In 2014, we had an unsolicited approach from Commonwealth Bank Australia, who were set up in those markets. They had an emerging markets portfolio. They then said they want to buy us with a view to start the bank in South Africa and for us to build digital banks in their markets in Southeast Asia. And we said, no, we've got the capital and the backing to do that. And when we sold to CBA, basically what happened, we had the capital backing to get us a bank license in South Africa. And we moved some of our core people, Koen among others, to Hong Kong, subsequently to Singapore, where we are currently headquartered. But we moved some of our core people into their offices, and we started to get to know, during the 3.5, 4 years that we were part of Commonwealth Bank, we got to know the Southeast Asian markets quite well. When we got the opportunity in 2018, when there was a change of guard in CBA to buy back time, globally and locally, with the support of Patrice Motsepe and ARC, we took the opportunity and then we were set up in those markets. And so that's the story, how we
But that
there.
for me goes to the point of partnership. If CBA hadn't partnered with you, you wouldn't have had those 4 years to learn that market. So it actually emphasizes the point that you make.
And if we were not prepared to relinquish control in that process, now that's a different story in itself. It was very tough, but we got incredible assets from those years with CBA.
Thank you. Chipo, please, is Chipo here? I just want to be honest with time, but I also want to leave time for questions from the floor. Are there any questions from the floor? I see a hand. Is there a mic? Because I'm sure there are questions.
I must say, firstly, I must give you a compliment in terms of your kiosk. I think when they came in back in 2018, early those days, I thought, wow. I mean, look at the branch. Everything was just available there, same time, in less than 5 minutes. So that was really amazing. I wanted to ask, obtaining a banking license is quite expensive. How did you guys get to that state of actually applying for one, getting the funding for one, and actually having one?
Yeah, so we were the first license to be awarded full commercial license in 18 years, and then the discovery followed. So it was difficult, and we got that through the support of Commonwealth Bank. They were at that stage the 10th largest by market cap bank in the world. So it was a serious player backing that license application, and we had to have a very good plan, which we had. Okay. In the Philippines, we partnered with the Gokongwe family, which is one of the 3 largest family conglomerates in the Philippines. The Gokongwe family gave us that backing because they are not only politically but economically very well integrated into the country. So we got one of the digital bank licenses in the Philippines with their support. In the case of Indonesia, the chances are very good that we will buy a bank and for the license, and one of the smaller banks, and roll out with that strategy. So there's different ways, but to us, it's very important actually to have our own bank license to do what we want to do in countries where we are.
Sorry. Another question. I thought I saw a hand over there. Yes. If the mic can make its way, and then we'll go back.
Thank you, Calvin Gusfer, Standard Chartered Bank. Thank you so much, Rato. Thank you, Chad, for sharing those words of wisdom with us. And a lot of what you touched on, I think, could be relevant to a lot of the discussion we had, the desire to serve the customer, pushing for lower cost technology, coming back to the question asked now, if you were to look at Africa as part of your multi-country strategy, obviously there's so many different markets. What kind of factors would either make you more likely to sort of say that is a market that we could go into, or more hesitant to say the conditions in that market are not right? Thank you.
Okay, I'm going to respond to that, if I may, by just applying some of the criteria. Now, this sounds like a very nerdy way of answering the question, but let me do that first, and then I'll bring a bit more emotion to this. So we've got 5 specific criteria that we look at, 5 to 6 criteria going into country. The first and most important one is actually regulation. And there are 3 aspects to that. I don't believe how many countries still require wet signature, right? So let's park that one. The other one is a progressively thinking regulator. The other one is it must run on our selected cloud platform. Because what we don't want to do is we don't want to build 5 banks or 10 banks. We want to build a single stack to which you can roll out throughout the world. Again, from a cost to serve perspective. And we just saw the benefits of that even through a simple thing like Nubank leading our Series D, and us now leveraging off their incredible relationship of discounts with AWS. We're now getting the same discounts that no other bank can do without that type of partnership. The third one is, the fourth criteria is the partnership in country, distribution partnerships, and the fifth one is a very important one. By the way, these things are not necessarily in order of importance. It's a very important one is the structural nature of the banking industry. So, for example, in the Philippines, in Indonesia, slam dunks. It's there are oligopolies. There are with, as far as we are concerned, some lazy revenue streams that we can also get access to in order for us to launch and over time, hopefully give that back to customers, so to become profitable. And I think Africa is most definitely on our long-term map. The reason why we didn't get to this more destiny, in the sense that we were catapulted into Southeast Asia, and now we've got access to Vietnam with 100 million customers, Philippines with population 110 million, Philippines 280 million in Indonesia, over and above the 60 to 70 million in South Africa. I think what is important is Africa must become more investable, and people are dancing around this, but political certainty is important. It is important in countries. The fact that the Naira, for example, crashed with close to 90% last year. It's a classic big impact on the trust in certain countries in Africa, and specifically in that East as West Africa. So it's important to note that we are talking to all people reaching out to us from an African perspective, to make sure we stay close and that we learn as much as possible. That as we get ready and the markets get ready for us, we do it. But we can also only do so many banks, one bank per year and a half, let's say.
Which is fast in banking terms.
Yeah.
That's very fast. There was one more question in the front. Yes, you've got the mic.
Okay, I think this is audible. You mentioned you guys are going for Series D at the moment. So I was curious, with some of that equity dilution, how are you managing your competing interests versus the boards and the VC funds who might have a differing competing interest? We've seen a lot of startups fail as a result of venture capital fund board members try and drive their own specific interests on how the business should be run. So I'm curious on how you continued to hold on to what you call that founder vision and drive when you have equity board members who can dissuade you from that?
Yeah, so no, that's a beautiful question, because it's not as if we don't have our challenges in there. But one of the things is that I think it's again a matter of partnership. You have to be able to listen carefully to your partners, to your equity partners and your investors, and treat them as, and your board members, and treat them as partners. We spend a lot of time actually on investor relations, the existing investor relations. And I think the other thing I want to say is, I mean, there are, for example, investors. There's an APIS investor. APIS is an investor. They've got a 7 to 10 year fund invested in us. They're now at that stage where they have to exit. So they are in process of liquidating their asset the next 2 years on the back of the new bank M&G Invest Series D raise. Okay, so we have to think about that and then not be forced into certain clauses where can pull an IPO on us and so on if we're not ready yet. Generally speaking, I think our investors are patient, long-term investors who are prepared to take this whole venture with us through its whole cycle. Nubank was arguably one of the only strategic investors that we would have allowed in at this point in time. And there are specific reasons, but not unimportant, not necessarily the most important one, but the important for us was that it's still founder-led. In other words, there's a cultural fit between us, and we have started working 6 months ago, for example, through work streams on data and AI and technology and credit and so on. That's actually amazing. Yeah. How much we can also help them and so. So, and then what's important perhaps to mention is we also are working towards an IPO. The IPO ready in 4 years from now, 3 to 4 years from now, and we have already started to strategically present our case to investors in London and New York and so on. That's how long it takes to really sell a Southeast Asia, Africa story into those markets that's got such a lot of capital, but are so abundant with opportunity.
I think what Chart is not adding there is, you know how he's talking about the investors and their commit. The amount of time that is taken to negotiate these arrangements is mind-boggling. The structures, we're talking about very complicated investment structures, and to your point, when a certain investor needs to exit, how they exit, and what do they exit with. So I know we always say, well, are the lawyers needed? The lawyers are needed, particularly when you have... I mean, we spend hours and hours and hours and hours negotiating some of these series capital raises. So it is not a small feat. But I think what Jart says about culture, about the principles, about the criteria to select a partner, those things are actually discussed during the negotiations, right? They may seem like soft touch points at the moment, but there are moments in a negotiation where you actually say, hold on. As founders, we want 1, 2, 3, 4, 5. We're actually not willing to negotiate this, or we're not willing to give you this part of the business, or access to this stack of information. Because I think the one thing that has not come out is time is a very data-heavy business. And when you're attracting investors, depending on the nature of the investor, and to your point about finding a partner that actually their business and your business, there's a core benefit. Negotiating those elements can take like days, weeks. So it is very important, like you're saying, to be clear, what is my criteria for picking a partner? And when we enter into the negotiation room, what are we actually negotiating? And being clear before the conversation starts, what are non-negotiables?
Absolutely. Yeah. No, you've been helping us through that with your team, and have been the witness of sometimes a bit of blood against the walls and so on. It is, but that's important, to be very open and very frank up front.
Yeah.
If you can afford it. Sometimes you can't.
True. Chipo, where am I on time? Oh, I'm going to leave it to you to decide whether there's one more question or not.
I'm going to deputize this to the conference organizers. Can I take 2 more questions? Can I?
Oh, lovely. Thank you. Okay, we have a question over here in the front.
Okay, is the mic on? All right, so Chad.
Okay. Hi, Dr. Chad. This is Stephen, CEO of Power Cloud South Africa. I did many projects. They have a similar business model like you. Like for example, OPay, they have business in many countries. It's also a digital banking business. When I talk with those customers, they met a common challenge which is the data sovereignty sense of all the countries. It become more and more stronger. You can see Nigeria, Kenya, Mozambique, those countries already published the policy that the critical data must be kept in country, mustn't go out of country. How do you
deal with it?
Face the same challenge, or how do you solve that?
Can I repeat the question just for those who didn't hear? So he's saying that data laws are becoming more specific, and one of the requirements is that data must be held in country. So has Time experienced that challenge, and how are they dealing with that requirement of data having to be held in country?
So one of the things that we've, both in South Africa as part of the bank license application, as well as in the Philippines, as part of our bank license application, we had to work incredibly hard actually to get those regulators over the line so that they actually back us on going the cloud way. So in all those cases, the regulation has changed in country, Stephen, because of the way in which we engage the regulator. So what we said is, for example, Huawei or Alibaba Cloud or AWS or Azure, those businesses are much better set up to provide security on data than any bank can do internally with an on-prem system or its own cloud system and so on. It's global. Their business is security of data, one of the core pillars of it. That is one of the things. The other thing is, what we said is from our model of giving ubiquitous access to people to financial and banking products, we need to be super low in cost. And the only way in which we can do it, we convince the regulators, is actually to go cloud and actually to have active nodes of cloud within the cloud. So in both South Africa and the Philippines, currently we run 3 active nodes in the cloud, of which only 1 active node sits in country. And that is regulatorily approved.
The last question.
Jeez, it better be a decent question. So I want to flip the question on partnerships. And I want to ask, what made Nubank choose Time? Reason being, a lot of us have been to Brazil. We've seen Nubank, including your biggest competitor, Capitec. Nubank has been to South Africa. They've spoken to a couple of the banks. And Nubank is the North Star in terms of digital banks. We all look up to Nubank, north of 100 million customers and counting in Mexico and Colombia, obviously Brazil. And they could have chosen anyone in the world. But why did they choose Time?
One of those questions one should throw over to them, but let me try. We've been following Nubank since we started. And a year and a bit ago, Koen and I started talking about whether we should reach out to them. And the opportunity came up. We are part of the Endeavour Club. It's a founder support system for in emerging markets. The opportunity came up when David Velez, their founder, was the keynote speaker at the Endeavour Gala in New York in December 2023. Koen and I flew out with one of our trusted guys in the team, Nate Clark, who's our CEO in the Philippines. And we met the new bank team. Endeavour introduced us to them. And now, yeah, we could have reached out to them directly. But again, if you've got friends who are really trusted by both parties, you immediately have a default position of trust. And one thing led to the other. So the visit of Nubank to South Africa in, I think it was in April, May last year. June actually, sorry. At that stage, we were already quite advanced in our negotiations of some principles. Okay, so David and his co-founder Christina and a few other guys flew over, met us at the same time, met a few of the banks, and then flew over to China, did a conference there. Flew over to Philippines to meet Nate and his team, and also met the banks here and just opened up the opportunity, looked at the opportunities, did the same in Indonesia and so on. And they concluded that their best strategy would actually be to back us as the next new bank of Southeast Asia and Africa. And that was their decision to make. So we are very flattered by it. We think it's a fantastic opportunity. For us, I think, it's a start of great things, having that partner. I hope it answers a bit of your question.
Well done.
Thank you, Char. Thank you for your time. Thank you for your knowledge. We really appreciate it.
Rato, thank you. Thank you. Yeah,
I'm going to ask Chart to just stay with us for like 30 seconds. Just like 30 seconds. We'll ask you to just stay with us. But thank you so much for that conversation, Lerato, and thank you for moderating it so well and getting all these beautiful nuggets and insights that we've been waiting with bated breath for the whole day.
Thank you.
I'm going to ask Mustafa to come up.
Thank you so much. Thank you. Thank you for the hospitality and for the invitation. It's a privilege. Thank you.
Our camera guy, where are you? Tumza, where are you? There he is. Thank you so much. It was amazing. Thank you. Thank you. You all heard that, right? So before I announce the next speaker, I just want to remind everybody in the room we've got an awards ceremony that's going to happen promptly after the last speaker is going to come up. So please do not leave. The bulk of the people need to get awards in this room. So please do not leave without your award. So we're going to encourage you to stay behind for that a little bit. And then you do have a form that's been distributed earlier at your convenience. Please make sure you fill it out and we give our conference organizers some feedback so that next time they do it much better. Now I'm going to continue this wave of innovation and let's talk a bit more about intellectual property. So we've got Lance Abramson, who's the partner at Spoo and Fisher, who is our second last speaker for today, and he's going to come and talk to us about some solutions that are available to protect your IP and how businesses can sort of structure themselves around this. Lance, over to you.
Can you hear me? Is this on? Yeah. There we go, great. Okay, thank you everybody. So I'm here to talk to you an interesting topic while focusing on financial innovation. Don't forget to look after your intellectual property, your IP. It's really a topic to talk about IP. We could have discussed it for the whole day, and I've got 20 minutes. So I decided to try something different, and instead of giving you the answers, I thought I could perhaps guide your questions. What kind of questions could you be asking when it comes to your intellectual property? So the first thing is, what is intellectual property? I still get asked this very often. And really, it's just an umbrella term for property rights that result from the creations of the human intellect. So it's things that you come up with in your mind, and there are rights, property rights that result from that. There are different kinds of intellectual property, and just an overview of them. I'm not going to deal with all of them, but they split up into registrable and non-registrable rights. So your registrable rights are your patents, your trademarks, your designs, integrated circuit, plant breeders' rights. All of these things have something in common. They have one thing in common, and that is if you want to obtain rights, you have to file something. So if you want a patent, you have to file the patent at the patent office. If you want a trademark, you've got to file an application at the trademarks office. And those are rights which you would then have to go and apply for and are registered. And your non-registrable rights are your rights which are automatic. So copyright, interestingly, you do not have to apply for copyright protection. Copyright protection is automatic, and you just have to make sure that everything is in order, and your copyright protection will automatically vest. And then know-how and trade secrets is also something which is not registrable. So I'm only going to touch on 3 today. We're short of time. And I picked these 3 because they're particularly applicable in the fintech space, which is why we are here today. The 3 I'm going to pick on is trademarks, copyright, and patents. Trademarks, copyrights, and patents. So what are they? Well, trademarks are a name or a logo. I've picked some over there. A company name, a product name. It's got to be something that's capable of distinguishing the marketplace. And I just picked up 2 examples from the brochure over here. Nedbank, the name Nedbank, it's hopefully trademarked. So that would prevent you from using the word Nedbank in the space without their permission. And also TimeBank, if Chart is still here, you can tell us if they filed a trademark for TimeBank. Or if not, you can go and open your own bank and call it TimeBank. And then the logos, the N, I mean, you all recognize it, you know, that capital N. So that's a logo that would have been filed. And the TimeBank logo, something separate that should be filed and protected. So you can't use that N if it's registered without permission from Nedbank. Could also apply to a product or a service. I just picked up 2 greenbacks. That's the Nedbank rewards program. So they, again, will hopefully have filed a trademark for that. So you can't start a rewards program and call it greenbacks. You'll fall foul of their trademark. And one from Discovery, Vitality Money, is what they call one of their programs. So any service, product or service, could also be trademarked if it's capable of distinguishing in the marketplace. Okay, so you've got names, you've got your logos. What are some of the things that you should be thinking about regarding the trademarks of your company? Number 1, have you actually filed a trademark application to protect the name of your company and the name of your products and services? Have you gone to the trouble of instructing somebody and actually filing those trademarks at the trademark office in South Africa? And not only South Africa, because trademarks are territorial, so you need to file a trademark application in every country that you are operating in or intend to operate in. So where was they going? Philippines, I think. So hopefully they have filed the trademark TimeBank in the Philippines to protect that future market that they're entering into. And before you launch your new company or a new product, you have to check if the trademark is available for use. There are so many stories of people launching companies or launching a new product or a service, and then they actually find out that somebody else owns the trademark, and they have to withdraw the product from the market, rebrand it or rename it, and then launch it again. And what would the cost to your company be to do that? To launch a product and then have to change its name and relaunch it afterwards? because you're infringing a third party's trademark. So when it comes to trademarks, those are three things that you could take away to think about. Have you filed your trademarks locally and internationally? And before you launch any new products or services or companies, have you checked to see that the name is actually available? Next one I want to deal with is copyright. So most people think of copyright as applying to literally musical or artistic works, right? A book is copyrighted, music is copyrighted, a painting, photographs, all of these kinds of things are copyrighted. But it also actually applies to, in your space, software. So software is copyrighted, and it's the kind of software that you have to, that could be internally, could be back-end software that's processing financial transactions, or it could be the software that you offer out to your clients. All of that software will have copyright that applies to it. And the copyright protects unauthorized copying of the source code of the software as well as any of the screen layouts of the software. And it will apply, as I said, to your back-end systems, but also websites, smartphone apps. All of these things will have copyright that apply to them, and it's very important to bear this in mind. So what are some things for you to think about regarding copyright? Well, it's automatic, as I said, copyright. It automatically comes into play. The author, when it comes to software, the programmers are the ones that are the originators of the copyright. If it's a third-party software that you're using, do you have all the licenses in place for that software? And that software, again, that you're both using internally, behind-the-scenes software, or your website, your app that you might have you got all of the licenses in place to be using that third-party software? If you develop software internally, do your employment contracts and your contracts with people that work for you, do they correctly reflect that the copyright is owned by the company? Or does somebody else actually own the copyright to the software that you are using or have developed internally? And as important, if you use, let's say, a software house, let's say you approach a website developer, you develop a website and they write this whole website for you. Now, there'll be an agreement between you and them about what they're going to produce, how much you're going to pay for them, etc. In that agreement, who owns the copyright to the website? Does the company own the copyright to the website, or do they actually own the copyright to the website? Very important things to check and to bear in mind before you enter into these kind of agreements. And then patents, the last one that I want to touch on, and this is really my own personal speciality. So patents are for technical inventions, technical innovation. And in order to be patentable, the invention has to meet a few criteria. So the first is it's got to be globally new. Very important, it's a global test. If the invention, if the product, the service, etc., already exists in some other country but not in South Africa, you can't patent it in South Africa. It's got to be a global first. Also very important, it's got to be globally inventive. And what does that mean? That sometimes you have a product or service which is very similar to something which has gone before. The difference is not much of a difference. It's not an inventive difference. Put another way, it's an obvious difference. And that can also not be patentable. So your product, your service, your technology, whatever it is, and I'll show you some examples just now of patents in the fintech space, but these inventions need to be globally new and globally inventive. And then the last one is suitable subject matter. There's a lot that can't be patented. The examples that I gave you under copyright. You can't patent a picture or music or an artistic work. All of these things cannot be patented. So I'm not going to go through them now, but the Patents Act excludes things, mathematical models, scientific theories. There are a number of exclusions in the Patents Act of things that cannot be patented, even if they're globally new and inventive. So we have to make sure that we don't fall foul of those. An invention in your space could be a system, could be a new and inventive financial system, a new and inventive method, or perhaps a device for processing a financial transaction that's new and inventive. These are the kinds of things which might be patentable if they meet the two criteria, globally new and globally inventive. What we do know is that patents in the fintech space have exploded in recent years. If you go and put some search terms into, for example, Google Patents or the US Patent Office, there are not thousands, but tens of thousands of patents that have exploded into the space. And more and more and more interest in this space. It's an innovative space, it's a fast developing space, and a lot of companies are taking this, the patent space very, very seriously. Companies like PayPal, Microsoft, Visa, MasterCard, they have huge patent portfolios, these companies, tens of thousands, literally, of patents. And new to the marketplace, Bank of America, JP Morgan. If you go and have a look, you'll see that all of these companies take their patent portfolio very seriously and have filed many, many patents. So it'll be interesting to think of your own companies. What does your patent portfolio look like? Is it protecting your innovation? And with the increased patent portfolios is an increase in patent litigation globally around fintech patents. So if a patent is infringed, then the infringer will typically be taken to court for patent infringement, and the courts can award a delivery app or to stop using the infringing product. They could order an awards, let's say reasonable royalty, and legal fees. So it's quite serious, the consequences for infringing a third-party patent. This is just a quote I found. A lady, Kathy Besant, who's the Chief Operations and Technology Officer of Bank of America. And this is how they're thinking about it over there. Innovation is the heart of what we do. The sustainable development and deployment of emerging technologies play an important role in making our clients' financial lives easier. So that's how they're thinking about development. And they have a portfolio of 3,900 patents, the Bank of America. It's actually not a very big portfolio compared to other companies, but you can see how they're taking things seriously. So here's a list of some example patents. The top one is a granted US patent to PayPal, microfinance funds aggregation for a retail investor. That's the title of the patent. So exactly what it covers, you can't see from the title. We'd have to go and look at the patent document, and particularly the claims of the patent document, which set out the scope of monopoly, what the patent covers and what it protects. What we do know is that because it's a granted US patent, it has been through a rigorous examination process. It has been found to be new and inventive and something which is commercially worthwhile protecting. And then the US Patent Office issue the patent, and that's a patent to PayPal. Second one, another example of a US patent, social mobile shopping system, that's to PayPal. And again, you can't tell from the title, but that will be a globally new and inventive social mobile shopping system. Next one is a granted Australian patent to Visa, an electronic wallet checkout platform apparatus, method and system. So they came up with some new and inventive electronic wallet checkout platform, and they have filed a patent for that. And they have been, again, in Australia, it's an examination system. They have got through the examination system, and it's been found to be globally new and inventive. Next one, another Visa example, US patent, virtual wallet card selection systems, also very interesting in your space. And the last one I chose, it's a granted European patent. Europe works that you file one European patent application, and it covers all of the signatories in Europe. And that's a method and system for cash remittances using a two-country banking structure, and that's a patent to the Bank of America. So even though the Bank of America, operates obviously mainly in America, they obviously see Europe as a main commercial market for them. So they extended their patent into Europe, and they obtained the patent rights for that particular invention. So what are some things to think about regarding patents? Again, another topic that we could spend a long time on, but it is not accurate to say software can't be patented. Can't tell you how many times I've heard that software can't be patented. It is not true. Software can be patented. The laws relating to what software can and can't be patented differ from country to country, but there's no country in the world that doesn't allow at least some kinds of software to be patented. So don't think because it's software you can't patent it. Have you filed patent applications to protect your new technologies you've invented, or have you just released them into the marketplace and allowed anybody else who wants to use those technologies to use them without concern? Very important. You have to file your patent application before it goes into the public domain. If you launch a product into the public domain, you can no longer come back and protect the product by filing a patent application. So do you have a gate in your development cycle forcing the team and management to consider patent protection? Does somebody stop and say, do we want to patent this, yes or no? Some things you're going to want to patent and some things you don't want to patent. But is there a gate in that cycle forcing that decision to be taken? And before launching your product or service, do you check if anybody else has got a patent in that space, right? You might not want to patent it yourself, but you also want to make sure that you're not infringing anybody else's patent, like that Bank of America patent or one of those Visa patents. So if you are innovating, you are developing, you are launching new products, this is something you really need to check before you launch a new product into the marketplace. And interestingly, but obviously in a way, one new product can have multiple fields of IP applying to it. So you could have a trademark on the name of your new product. You could have copyright on the source code of the software that you've written to develop that new product. And then you might have a patent protecting the underlying new and inventive functionality that your new product has launched. So there's lots to think about in the intellectual property space. The golden standard for IP protection, and many companies have done this, is to set up a formal IP policy inside the company. And then, in conjunction with that policy, which will set down the guidelines of how you manage your intellectual property and avoid infringing third parties' IP. But sorry, what I wanted to say was in conjunction with that, you appoint an IP officer or a committee that will oversee the implementation of the policy. This is the gold standard. The companies that take their intellectual property seriously will be implementing something like this so that somebody's thinking about it, somebody's paying attention, and somebody's taking the necessary steps to protect your IP and avoid infringing other parties' IP. So I hope this short presentation has raised your curiosity relating to IP in the fintech space, and there are things in here that you should be considering. And for more detailed information, please contact me. Thank you very much.
Much, Lance. Thank you. It's amazing how time feels short when you're up here, right? Right, we're going into the final session of the day before the awards ceremony. And now we are going to talk about combating anti-money laundering. Financial crime isn't slowing down, and I'm sure we've heard all the stories and everything that has happened, and some of us probably have been victims of it at some point in our lives. So we're going to have a silver partner, Smile ID, a leader in digital identity and fraud prevention. They're going to come and speak to us for the next couple of minutes. And who better to talk to us through the future of AML than Dustin Stridham, who is the Vice President Commercial at Smile ID. You are the closing act for us today. Well, pre the awards. So we look forward to it.
Thank you.
All the best.
Can you all hear me?
Yes, we
Great.
can.
So I think it was Lorato that said she had the graveyard shift a little bit earlier today. But I'm here to officially tell you that this is the graveyard shift. So firstly, I'm going to apologize because, as you can see, I'm going to be talking about fraud. So graveyard shift and fraud, again, I'm very, very sorry. But just by show of hands, does anyone know the fintech business based in South Africa called Stitch?
Yes.
Okay, cool. Some of you do. So anyway, I'm going to use a quote from the CEO of Stitch, Kian Pillay. And his quote is that fraud is sexy. And you can check with him on that. It is true. So hopefully that will give you a little bit of hope for this session. So just very quickly, so my name's Dustin Stradham. I'm the VP of Commercial at Smile ID. And essentially, Smile ID is a digital identity verification and authentication business operating specifically across the African continent. And really what we do, our mission is to try and help users prove their true identities regardless of their IP address or regardless of the device that they're using. And we do that with either a face, an ID number, or a document, or sometimes a combination of all of those things. So really, at its core, we're a facial biometrics business, and we operate in two spheres, right? So whether you're onboarding customers onto your digital platforms, or whether you're looking to authenticate them during the sort of life cycle or journey of that customer, we have a role to play there, right? So from an onboarding perspective, we use facial biometrics to verify that user against a source of truth, and that source of truth is often either a government-issued ID, a government ID authority database, so like the DHA or the Department of Home Affairs in South Africa, and the equivalent across the African continent, or it could be a government-issued ID document, right? So taking a photo of that and matching it to the face. And then on the authentication side, really what that is it's multi-factor authentication using a face. So some of you with higher-end devices might be familiar with Face ID. That doesn't exist on all devices, especially across the African continent. And really what you're looking to do there is if it's a sensitive transaction, a password reset, we're looking to change that from passwords to actually being able to verify yourself using your face. So let's just get started. So what we do at Smile ID, in November, we processed our 200 millionth identity verification check. We're doing about 10 to 12 million KYC and authentication transactions every month now. So I would estimate we're probably sitting at about 230 million verifications to this date. And what we do is every year we put out a report, a very detailed report based on this data. And you'll see from January 2024 to the end of 2024, we did 100 million KYC verifications. So what we've done is we've consolidated that data and we've tried to gain insights from that. So we look at fraud trends, where that fraud is taking place, how it's evolving, and I'm hopefully going to share some of that with you today, just to give you a little bit of insight and hopefully not scare you too much, although that might happen as well, but just as to what's happening in the fraud landscape across Africa. So really some key insights. And the number one thing that we realized, and I'd like to also get a show of hands on this. So who thinks out of the 100 million KYC checks and authentication checks that we did, that between 2023 and 2024, fraud decreased? We have one hand. Who thinks fraud increased? Okay, most of you do. So actually, that was not the case. So that gentleman is correct. Fraud across these 100 million checks decreased. But there's a caveat to that, right? Why did fraud decrease? Okay, fraud evolved, it changed, right? So traditionally, so probably more so in 2023, a lot of companies, especially fintech companies and banks, and sort of digital platforms that are authenticating users using a face, we're using textual-based verifications primarily, okay? And it's very easy for someone to get hold of your ID number and try and onboard if all you're doing is you're verifying someone with an ID number without using a face. So what we saw is a major shift towards biometric-based verifications across 2024, which is fantastic, right? And that means we actually saw a dip in overall fraud across our user base. So that's great. What happened was we saw a massive increase in biometric-based fraud, right? So all-time high on biometric fraud of 16% in 2024. This is where we start getting into things like generative AI fraud, right? And we'll get to some of that in just a moment. And then, very interesting one is we saw fraud levels 4 times higher at the authentication stage when compared to the registration phase. So remember when I spoke about the two areas we play in? It's onboarding, where you're verifying the user, onboarding them onto your platform, and then authentication, where when you're trying to do a sensitive transaction or a credential reset or something like that, you're actually re-verifying that individual using their face. And our customers that are using that saw fraud attempts 4 times higher at authentication than at onboarding. So something just to be mindful of, be aware of, and this really speaks to things like account takeover fraud and that sort of thing, where users are able to obtain accounts, and then if you don't have additional controls in place from an authentication perspective, these fraudsters have free reign of that account to do what they please, right? So just in terms of what we also saw, so who knows what an SDK is in this audience? One hand. Okay. So just very briefly, an SDK is a software development kit. So effectively, there's a number of ways you can roll out solutions to verify users using facial biometrics. The important thing about an SDK is you embed that into your application, and essentially that SDK controls the captcha, right? It also has on-device functionality that can help to mitigate against fraud elements. And what we found is customers that had our SDKs integrated were twice as likely to catch fraud than any other integration method. So very interesting insights. And then just where we saw the fraud. So the highest levels of fraud were actually seen in East Africa. And that's largely down to the fact that the government ID authority systems are quite flawed in many ways. So a lot of customers end up using documents, and we see a high rate of document-based fraud there. Second to that was West Africa at about 25%, primarily biometric-based fraud taking place in West Africa. South Africa was down at about 21%. So still very high, alarming rates, but most of the fraud we've seen there is around the South African Green Book ID. Who has a Green Book ID still in this room here today? I have one as well. So you know how poorly designed that document is. It's basically a photo that's like pasted over with some sticky tape, right? Okay, so fraudsters, that's a dream for them to be able to see a document like that so that they can try and fraudulently recreate it. And we see a lot of fraud attacks on documents like that. And then the leading financial sector was the leader in terms of fraud, and it was sort of digital banking and micro-lending were the two key industries that we saw the highest levels of fraud in. Okay, so just some of the kind of trends that we're seeing. So number one, I think, is obvious, right? It's the rise of generative AI fraud attacks. So generative AI tools, I'm sure you're all familiar with using tools like ChatGPT and DeepSeek and all of these things, and they're phenomenal, right? They can do great things for you, not just in your personal environment. You can create incredible visuals with just a few prompts, but in your work life, you can summarize things, you can get them to create presentations. But it's important to recognize that these tools that are making things very easy for you and I to do are now in the hands of fraudsters, right? And that means they have the ability to create very realistic faces, documents, and essentially synthetic IDs that they can use to try and bypass biometric-based fraud solutions. Now, we've also seen a huge rise in identity farming. So effectively what that is fraudsters at scale are using unethical means to gain large amounts of identity data. And they're then using that identity data to create synthetic IDs to obviously fraudulently onboard onto accounts. And then the other big trend we're seeing is insider-assisted account takeover fraud. So this is where someone within an organization has privileged access to systems and logins and that type of thing, and they're working collaboratively with fraudsters to actually target account takeovers. Now, the combination of these three things can be devastating, right? When a large fraud ring has large amounts of identity data, they have tools that can create synthetic identities, and they're able to work with insiders at various organizations. It can become a lethal combination. And we're seeing a lot of this type of fraud taking place today. A key thing that I spoke about initially, we saw that reduction in fraud, but we saw an evolution in the type of fraud that we're seeing. So this is just a little bit of insight as to kind of what we've seen over time. So about 2019, the most common type of fraud was unauthorized selfies captured via hidden cameras. So what is this? It's someone sleeping on a train and someone was trying to capture their selfie and find their ID number and log into their account. Things like that. That was the most common fraud type back then. Then we saw in 2020 duplicate face signups. Okay, so users were trying to sign up multiple times. There was a lot of kind of bonus-based programs in the market where users were trying to get that free credit and sign up for multiple accounts. Then in 2021 and 22, funnily enough, it was cardboard cutouts. And that is literally what it sounds like. So someone would print out a cardboard cutout of your face and then try and onboard with the facial biometrics doing that. And that started to get a bit more sophisticated from 2023. We started seeing simple face manipulation with various tools, digital tools that you could use to do that. And 2024, by far, we started seeing the rise of face swaps and generative AI. And we're seeing that at scale. We saw 7-fold increase in deep fake attempts on our customer accounts in 2024. So the threat is real. It's there. But the important thing to note is these advancements in technology that are providing fraudsters with these tools to do this, technology providers and industry players have these tools as well, right? And there's a little bit of an arms race taking place, but there is technology out there that can pick up and mitigate against these types of threats. So we've seen a huge rise in document fraud. I'm not sure if anyone's aware of the business, well, I wouldn't call it a business, but the platform that gained some notoriety in early 2023 called OnlyFake. And essentially what they were able to do is allow users to create very realistic fake IDs at scale for only $15. And these were sometimes indistinguishable from legitimate ID documents. So these things are, this is just one small example of where this is happening, right? And fraudsters are using these types of documents to gain access to digital platforms, again, at scale, right? So there's forgery of documents happening, alteration of documents where genuine documents are kind of modified, which is also a big threat, and then obscured documents. Now, there are ways that you can mitigate against these types of attacks, and it's important to kind of call these out. So, like I mentioned, at Smile ID, we're also using large language models to pick up anomalies in documents, things like portrait replacement or text replacement on documents where users have got hold of expired documents or stolen documents and tried to modify them. We're actually using tools to pick up those various elements. It's important to make sure that you're comparing these documents against legitimate templates with computer vision and AI models. And also add things like biometric verification to that, right? To ensure that the user who's behind the device is actually the owner of that ID document. And then also other methods are you can actually cross-reference that against the government ID authority database where that's possible. Then very quickly, biometric fraud. We've spoken a lot about this, so digitally altered faces, replay attacks, face swapping technologies. And a crucial part of combating biometric fraud is what we call dynamic liveness detection, right? So what is liveness detection? It's basically a method of verifying a user when they're taking a selfie to ensure that there is a real human being behind the device, okay? That's a crucial part of detecting deepfakes. Now, dynamic liveness detection combines unpredictability with real-time analysis. So you'll see in the video over there, the user will be provided with a number of randomized prompts that a fraudster is not able to pre-record and anticipate. So there's on-device elements and then algorithmic elements that are also mitigating against this fraud. So it's a crucial part of biometric checks. And just to kind of give you a sense of the data, when we look at our 100 million checks, 90% of all biometric fraud attempts that were caught by Smile ID in the last year were detected because of the active liveness component in our biometric solutions. So that's the crucial piece to all of this. And then on the document side of things, so 69% of the fraud attempts on documents were detected because of the biometric layer in that document verification solution. So it's so crucial to have a robust biometric verification layer in place. Then, important to also recognize that it's not just technology solutions or technology providers that are the silver bullet to all of this. There are things that need to be done within your own organizations, that can be done within your own organizations to help mitigate against this. It's a collaborative effort that needs to be in place here. So things like IP whitelisting. We've seen large-scale fraud rings that have targeted IP addresses of clients. They've used those to sort of ping ID authority databases with randomized ID numbers to get hits on which ones are actually legitimate. And if they do that with hundreds of thousands of checks, they'll get back a small number of identities that are actually legitimate, and then they'll take those and use them to create synthetic IDs. They'll even use your IP addresses, if they're able to hack them, to try and bypass your biometric verification systems as well. So IP whitelisting with your solution providers is crucial. Things like API key rotation just to make sure that you have reduced your exposure in the event of a breach. Rate limiting to guard against sort of accidental overuse or malicious activity on your accounts. And then obviously, if you're using things like SDKs that we spoke about before, because we're in an arms race with the fraudsters, there are constantly going to be updates that are being made to the algorithms, to the technology, and it's so important to keep up to date with the latest software that you're leveraging from your technology providers. And then finally, incident monitoring around anomalies in traffic and that type of thing. So just to close off, I think the key thing that I want to talk about also is collaboration, right? We're in this room, we've had a lot of interesting chats from regulators, from industry, from technology providers, and I think it's so crucial that in order to stop this growing threat, which hopefully I've highlighted today, of fraud across all markets, it's crucial for us to collaborate together. Regulators need to be setting the standard, the high standard for what needs to be done from a KYC perspective. Industry bodies need to be collaborating, potentially sharing data, building fraud lists, along with technology providers as well. And all parties should be working together to ensure that our users that are trying to onboard onto digital platforms are as safe as possible. So in summary, fraud is evolving. And the key thing is it's going to continue to evolve. So it's important to understand what's happening now, what's happened in the past, and ultimately to try and recognize that this is going to keep changing. Tools are going to be evolving, and they're going to be in the hands of these fraudsters. But the important thing to note is these tools are in the hands of technology providers and the industry, and we have the ability to actually stop these fraud attempts at the source. So that's it from me. Thank you very much. Happy to take any questions if we have time.
Thank you very much for that, Dustin. That was the graveyard shift. If anyone has got questions for you, they're going to ask you after this and hopefully at the awards ceremony. Now, there's one thing I need to do before I sort of deliver my closing remarks. One of our partners, as they mentioned earlier on, if you remember, for some of you that were here early, are running a raffle. The prizes are amazing. Now, if you've got a business card, there's it looks like a fishbowl. Yeah, there's that little glass bowl there. Drop it in there. If you do not have a business card, kindly write your name, your email address, your cell phone number. Drop it in there because we're going to run the raffle right now. We are going to run the raffle right now. Trust me, the prices are amazing. You want to participate in this. If you don't have a business card like me, just jot it down on a piece of paper. They're taking pictures of me as well, so I might as well pose whilst you guys drop your names in the box.
So while you drop your business card, while you drop your business cards, I'd like to present this goodie to our conference chair, Ms. Chipo Mushwana. And that's for an incredible day for managing the program with so much of excellence and energy. A round of applause for Chipo, please.
Thank you. Thank you very much. A picture. This is embarrassing. Dumza, you have to come take a picture again. This way? At the middle? Here? Thank you very much. Thank you. I see the fishbowl is full. That, yes. How many prices are there? 2? 1? Okay. All right. Well, they're ready for you to draw the raffle. Come this way so it's transparent and everyone can see what's being done. You're not allowed to put yours in there. You shake it, mix it, don't blow on it, don't do anything on it, just pick. Choose one. Andrew Pillay. Andrew Pillay, is he here? I think I saw him walking out. You are a tough crowd. Maybe he's in the bathroom.
Okay, I put it inside and get
Do you want to give it to me? I'll hold on to it. I think I saw him walking out a few minutes ago. This is a tough crowd. If I was Andrew, I'd want you to wait for me.
Okay. Nora, that one?
Nora.
Where is it? Is you?
Yeah, Nora is here. Come, Nora. I'll tell you what you want.
So she have to choose between Safari for 2 or Spa for 2.
So Nora, this is like life-changing decision. You have to choose between a Safari for 2 or a Spa for 2. Depends who you're taking. If it's a Spa, I'm coming with. She took the Safari. They'll be in touch with you. And then, is that all? And the Spa?
Well, it was for choice.
You should give it to somebody else. No, you take one, and then they can give one to the other person.
Okay, let's have the other one.
Pick a paper this time. Yeah, that's a paper.
Davis Moodley.
Davis Moodley. All right, excellent. Thank you so much. And thank you for indulging me and allowing me to make a call and you give it again. You want a picture? Sorry, Davis Moodley? They want a picture? They didn't get it? No? They're not keen on the picture. All right, excellent. Dustin, I didn't say thank you to you. I got caught up in the festivities of giving away free stuff. But thank you very much for that powerful keynote. I hope you got your nice black box as you left the stage. And just like that, ladies and gentlemen, we have reached the end of the second Africa FinTech Forum 2025. On behalf of AFF, I want to extend my deepest gratitude to FSCA, our sponsors, speakers, partners, and most importantly, yourselves that have made it to the end of the day. Today, we've explored game-changing innovations, disruptive trends, and the future of fintech in Africa with some of the brightest minds in the industry. At the Africa FinTech Forum, we don't just host conferences, we build conversations that shape the future of fintech in Africa. And I'm sure after today's lineup, you can agree we did just that. So this is the place where the next big ideas are born, partnerships are forged, and the industry takes a leap forward. The journey doesn't stop here. Join us on our upcoming editions in Cairo if you're there in June. in Lagos in August, or in Nairobi in my birthday month in October 2025, as we continue driving fintech innovations across the continent. And for those looking beyond Africa, our premium fintech series is beginning fintech's finest to the Middle East, North Africa, and Southeast Asia. Stay connected, stay engaged, follow us on LinkedIn, on Twitter, and all our social media pages to stay ahead of the game. But remember, don't just leave yet. We're here to celebrate trailblazers and industry leaders highly anticipated at the Africa FinTech Forum Awards. So at this point in time, I'm going to look for Ray. Is Ray here? He was in the room. Did you just step out? Ray, I need you to take over because this is where I'll officially hand over the reins. Am I handing over the reins to you? Perfect. Thank you so much for being a great crowd. Thank you.
Ladies and gentlemen, esteemed guests, innovators, and leaders in fintech. Good evening and welcome to second Africa FinTech Forum Awards. Now, this is a night dedicated in celebrating visionaries, disruptors, and change makers shaping the future of fintech across Africa. Tonight, we honor those who are not just driving financial innovation, but redefining accessibility, inclusion, and impact in one of the world's fastest growing fintech ecosystems. The talent and resilience in this room prove that Africa is not just keeping pace with the global trends, it is setting them. These awards recognize excellence, but more importantly, they highlight the transformative role of fintech in bridging the financial gaps, fostering economic growth, and empowering millions. Now, each finalist here has contributed to this progress, proving that technology and finance, when combined with purpose, can change lives. On behalf of Africa FinTech Forum, I extend my gratitude to our partners, judges, and all of you who continue to push boundaries of what's possible in Africa FinTech. Let's celebrate the achievements of tonight's winners, but let's also look ahead to the innovations yet to come and opportunities yet to seize. Congratulations to all the nominees, and let's make an unforgettable evening. Now, before we start the ceremony, let's begin with a round of high-energy dance performance by our local folks, and their troupe name is Entertainment Zone. Thank you for that. Now we move to the awards, and let's look at the first category, which is Empowering Women in Fintech. May I call upon Calvin Huang from Huawei to do the honors, please? And the winner is Chipo Mushwana. Yeah, she's from NetBank, Honor of Women in Payments Africa. Can I have Chipo as well on stage? Yes, please. Congratulations, Chipo. And Calvin, I want you to stay there. We have next award. It's Top FinTech Recruiters in Africa. May I call upon Nora Dawood from Black Pen to come on stage, please. There's one more award you have to give. Now, the nominee for this award is Best in Intellectual Property Law. May I call upon Lance Abramson from Spoor and Fisher to come on stage, please. Now, for the next set of awards, may I invite Carmel from MTech to come on stage, please? She here? Okay. We have Jill from MTech coming on stage. The award title is Game Changer in Digital Finance. I know everyone will clap for this. This is Dr. Jort Wanderweit. To come on stage, please. The next award is Best Bank for the Customer Royalty. May I call upon Nsiba Hene from the African Bank. She here? I think she's already there. Thanks so much. I think she's there. Yes, thanks. For Best Banking. Can I call upon Daniel on stage, please, from Finasa. Dr. Judd, can I have you on stage to give away a few awards, please? May I call upon Calvin from Huawei? This is for the Best Banking Technology Vendor of the Year. May I call upon for the next award? It's for Best Digital Identity Verification Solution. The winner is Dustin Stridom from Smile ID. Here's the last one. Yeah, the last award is in this segment, Most Influential Female FinTech Leader of the Year. It goes to Carmel from MTech. I think Carmel left. Jill, can you come on stage? Dance. Call them. Now, before moving on to next awards, I would like to call upon the entertainment zone for one more set of dance for. Thank you for that. Now, let's move on to the next set of awards. I would like to invite Raul from INCO to come on stage to present this award. And the first one is for Best Innovator in Mobile Banking Excellence. Could I invite Brian Malangu from APSA Group, please? Brian? He's not here, I think. Okay, so we'll go to the next set of awards. Most Influential Digital Leader of the Year. And it goes to Tombizetu Dlodlo from Head of Digital Tragedy Discovery Limited. She's not there, okay. So the next award is Best Customer Experience. It goes to Shediso Kuzawayo from Ombank, Head of Service Operations. So the next award is for the Most Influential Digital Banker of the Year. It goes to Akona Bashe from Liberty Group, please. Akona is here? I think they have for the last set of awards, I would like to invite Keith Sibilika from FSCA to come on stage. Now the first award is for the Best Bank for User Experience. It goes to Thato Plamono from Head of User Experience, Rand Merchant Bank. No, I think so. It's not here. Now the next is Most Influential Talent Scouting. It goes to Sherwin David from Alex Forbes. He's here. Sherwin. Now the last award of the evening, it's Best Artificial Intelligence Solution Provider of the Year. May I call upon Alejandro from INCO to come on stage, please. With that, we come to the end of Africa FinTech Forum. Thank you, everyone. Thanks for the sponsors, delegates, speakers, and everyone to be present here and making this a wonderful event. Thank you so much.